Namaste. Good morning. Friends, welcome to the revision session. The revision is planned in one particular manner just to give you confidence. I'm going to do only the past asked question of CMA and CS. Okay, so that both are almost the same. You will get an idea about the whole aspect. There are some areas which I feel it is better to cover again, which includes salary PGBP. Okay, so we will cover again that today my agenda is complete residential status, salaries, PGBP, and go to total income because this house property and all is covered there. How much ever possible we'll do the total income, then come back to small chapters like house property, capital gains, etc. That's how we are going to progress this 2 days. Approximately some 10 to 12 hours of revision to give you all the confidence. One thing I always follow in revision is I don't ask question to you because I know you should not lose your confidence. So I don't ask question. We'll just keep working questions. The material is there in your digital format, but anyhow, it will be displayed also. You can use that. Let's start without wasting any time. I start with residential status and scope of total income. Mina, a British citizen of Indian origin, came to India on 1st October 24 and left India on 31/3/25. She was also in India from 3/9/19 to 15/2/23. She provides you the following information for the assessment year. Salary received in India, computed. Whenever the question uses the word computed, they have provided standard deduction. I need not provide. Income of preceding previous year from a property received in London remitted to India is never a taxable income. Income from house property in London received in India. Profit from a business in Nepal controlled from India, which is received in Nepal. Income from property in USA received in London. Income from house property in India, I will not see where it is received. Income from company deposit in London, 1/3. You are given the above or computed after considering eligible deduction. You are required to determine the residential status and compute the total income which is taxable in India. Ignore the new tax regime. Determination of residential status of Mina for financial year 24/25. For financial year 24/25. Number of days in India during 24/25. My dear friends, she came to India on 1/10/24 and stayed for the rest of the period. 1st October to 31st March. 1st October to 31st October, November, December, Jan, Feb, and March. Okay, and March. Can somebody tell me the number of days? Can you please use the calculator? How many? 182 days. Is that right? Is that right? Okay. So she satisfies the first basic condition. She satisfies the first basic condition. She is here for 182, October 1st to March 31st. Okay, October 1st to March 31st. She is here for 182 days. Is the class clear? Okay, now I am going for the easiest second additional condition to check is second. Okay, past 7 years. The question says she is actually a British citizen. Okay, she was also in India from 3/9/19 to 15 to 23. 3/9/19 to 15/3/23. So 1920, she is there from 3rd September to 31st March. Okay, she is there from 3rd September to 31st March. So leave the first 2 days, 28 days in September. So 182, already we know it is 182 plus 28. 182 plus 28, 200 days. Is that correct? Is that correct? 210. 182 plus 28 to 10 days. Okay, remember she is there for 210 days. And then 2021, 21, 22, 22, 23. In all these years, she is there for 365 days. Okay, in all these years, she is there for 365 days. Remember, friends, she is there for 182 days during the financial year 24-25, and she came to India for the first time or she was also in India from 3/9/19. We are checking for 730 days. So she also satisfies the the additional conditions. Hence, she is a resident and ordinary resident. Is the class clear? She is a ROR. How do I say she is a ROR? Number of days in India during financial year 24-25 is 182 days, which means she satisfies the first basic condition. Number of days, because first basic condition is 182 days or more. The set past 7-year conditions, any one basic condition sufficient. Past 7 years, 2 years, she is there for entire year. 2 years, she is there for entire year. So she satisfies that also. So she is a ROR. No. No. Shall I? Online friends, are you understanding? Okay. Moving on. Moving on. You can catch up with the next question. Vijay, a software engineer, born and brought up at Chennai, left for employment on 20th August 2020 to country X. He returned to India on 5/6/24 and joined ABC Limited as CEO. He has the following incomes during the financial year 24-25. Income from salary, bank fixed deposit in India, interest on bank deposit in country X, income from rubber estate in Sri Lanka, income from business in Malaysia, royalty income from a company in Dubai. Assume that incomes have been computed with eligible deduction, ignore new tax regime, determine the residential status, and compute his total income. Friends, once more. He left for employment in the financial. He came to India on 5/6/2024, which means he is there here for more than 182 days. From 5th June 24 to 31st March 25, he is here. More than 185 satisfies the first basic condition. Also satisfies both the additional condition. He only went in August 2020. He only went in August 2020. So before that, he was in India. So definitely more than 730 days and resident in more than 2 years. Okay. So number of days in India. Okay. More than 182 days. More than, so he satisfies the first basic condition. He was in India till 2020. Hence, he will satisfy both additional conditions. He is a resident and ordinary resident. Shall I progress? Shall I progress? Okay. Income from salary, it is computed and given 9 lakhs. Income from FD in India, 30,000. Income from FD outside India, 50,000. Shall I? Income from rubber estate in Sri Lanka. Let me give you, here's a ROR. Agricultural income from outside India is fully taxable. Fully taxable. Suppose in the question, I'm just asking you, suppose in the question, if they are given it in India, 65% will become agriculture, 35% will become taxable business income. Rubber, 65-35. Tea, coffee, 60-40. Okay, 65% will become agricultural income and 35%. In this case, no issues at all. It is from outside India. Income from business in Malaysia. Raja? The same. Yeah. Even so, his doubt is for a NR also, is agriculture income from India exempt? Yes. Section 10(1) for everybody, it is exempt. Probably in their country, they will tax it. For a NR, here also exempt. If it is rubber, tea, coffee, partial. Any other agriculture income, fully. $1,750. Is that right? I am not deviating from our exam questions. These are exam questions, 7-mark questions. I am not even moving out in these 2 days out of exams. All I am working out is just to tell you the trend in which the questions are asked. And also, okay, the exams questions might be from CMA, might be from CS, but all these are examples. Moving on. Mm. If it is rubber, 35% taxable. If it is coffee or tea, 40% taxable. Any other agriculture income, wheat, rice, tree saplings, everything 100% exempt. Savitri, 48 years of age, has the following incomes for the previous year. Okay, rent from property let out in London, credited to the bank account in Singapore. That is property outside India, received outside India. Salary in Singapore, credited, received in India. Bank interest in respect of fixed deposit with SBI, India. dividend from Indian companies, interest on deposit with Indian companies, royalty income from USA credited to the outside, received outside India. Calculate the gross total income for the year, assuming she is a ROR, RNOR, ENR. Where is the deduction asked? Assume that the income given has been computed with eligible deductions, which means they have themselves allowed the deductions. They have not asked the deductions. Let's start, friends. Let's start. Okay. Rent from property outside India, received outside India. Only for ROR it is taxable, not for RNOR and NR. Not for RNOR and NR. Only for ROR it is taxable. Salary income in Singapore, received in India. Salary income in Singapore credited to Chennai bank account. For all categories of assessee, it is taxable. For all categories of assessee, it is taxable. For all categories, it is accruing from India. I need not see where it is received. For all categories of assessee, it is taxable. Dividend from Indian companies, credit. Dividend from Indian companies. Interest on deposit with Indian companies. Royalty income earned outside India, received outside India. Check the total alone once. Is it clear? Is it clear? Yes, friend. No, it is received in India. Interest on companies or interest earned outside India, received outside India, then brought into India. That is what is inward remittance. Directly, if it is credited to India, then it becomes received in India. Income earned outside India, received outside India. We need to see only two things. Where it, if it is earned in India, we never want to see where it is received. If it is earned outside India, where it is received. Received also outside India. Over. Then brought into India. That doesn't matter. Where are you receiving it first time? That is what you should. May I move on? Friends. Jackson, a US national, came to India for the first time for business in India. Before this, he never traveled. He declared the following income for the previous year. Okay. One small, I didn't change the date, the previous past asked question. So I change it to 24, 25, and assessment year for us is the assessment year I changed 25. Profit from sale of building in India but received in USA. Technical fees received from an Indian company in USA for advice given by him in respect of a new project situated in China. Income from a business in USA received in USA, but business is being controlled from India. Past foreign untaxed income brought into India. This is always inward remittance. This is always inward remittance. Rent from a property in USA deposited in a branch of State Bank of India in USA. Interest on FD in India. You are required to compute Jackson's taxable income in India. Okay. Now, Jackson came to India for the first time on July 24 before he declared the following income. So, mm, he came to India. He came to India for the first time on 11th July 2024. From there on, he is in India. Hence, he is in India for more than 182 days in financial year 24-25. He satisfies the first basic condition. This is the first time he has come. So does not satisfy any of the additional conditions. Hence, he is a RNOR. Hence, he is a resident, but not ordinary a resident. Profit on sale of building in India. It is taxable in India. Technical fees received from an Indian company in USA for advice given by him in respect of a new project situated in China. Technical fees received from an Indian company. Income from business in USA received in USA but being controlled from India. He is a RNOR, so it becomes taxable. Can I? Can I? Shall I? Friends? Friends? One question from residential status. It can be along with compute residential status and determine total income. If it is exclusively total income, then they will ask all the three ROR, RNOR, NR. Okay. But it will be a straightforward and simple question. There is one other question which I will work in the last miscellaneous area. Okay. But it will be a straightforward and simple question. I have just picked up whatever question is from your exam. Suppose one of the income you are not knowing out of the six given, even one you don't know, please don't hesitate to take up that question. Out of the 7 marks, you might lose 2 marks, but still you will get 5 marks. Still you will get 5 marks. So don't hesitate to take up that question. Am I clear to you? Shall we move on? Okay. I am moving on to the next arena, salaries. I'm moving on to the next arena, salaries. Before going into this, let me give you an overview of this entire chapter. Friends, what are all the things we have to be cautious? HRA, how to compute. The three rules are actual HRA received, rent paid minus 10% salary, 50 or 40% of salary because based on place of accommodation. That will be exempt and then the remaining will be taxable. Okay. Okay. So that is with regard to HRA. You know, children education, hostel, those things are smaller. Okay. But remember, none of this can be claimed in the new tax regime. None of these exemptions can be claimed. Look for the question whether he is under 115 BAC or opted out of 115 BAC. Like that, the question will specify. Okay. Perquisites. Just to be sure about the basic things of how to compute RFA. You need not go intricate into it. RFA, gift, everything. We will check everything once so that you are able to recollect. Standard deduction. In the case of old tax regime, 50,000. In the case of new tax regime, 75,000. But no other deduction can be claimed. But in old tax regime, you can claim professional tax and entertainment allowance if he is a government employee. I start with question number 5. Mr. Cow, aged 60 years, retired from a private company on 1st Feb 25. He served as a general manager for this company for 25 years and 6 months. He was drawing a basic salary of 95,000 since 2023. So the average salary is also going to be the same. For the past 2 years, this is his salary. DA, 12% of basic salary, out of which 30% forms part. He received the following emoluments upon retirement. Gratuity, 25 lakhs, covered by the POGA. Covered by POGA. So, basic pay plus full DA. Let me not, this is just to confuse us. This is just to confuse us. Because here it is going to be basic pay plus full DA. Leave salary, 2 months of leave per year for service. He took a total of 12 months leave. Commuted pension. You are required to compute his income chargeable under salary, assuming he has opted out of the default tax regime. Our mind should be able to read the question properly, because we will be more fascinated to work out gratuity, leave encashment, commuted pension. They are asking you to compute the whole of the salary. They are not just asking you to compute what is gratuity, leave encashment and other thing. Okay. They are asking us to compute whole of the salary. In the beginning of the question should be that, followed by working. Always remember, presentation carries enormous importance. In the beginning of the question should be that. Shall we? Okay. Shall I, friends? Shall I? Basic salary. Basic salary. Friends, he was drawing a salary of 95,000 and he retired on 1st Feb. So it is for 10 months. It is for 10 months. Basic salary, okay, 1st April to 31st Jan. Okay. So 9,50,000. DA forming part, DA, DNS allowance, fully taxable, 12% of basic pay. Okay, 9,50,000 into 12%, 114. Check it out. Check it out. 1 lakh for our friend tells me 1,14,000. Okay, gratuity, refer working note 1. Leave encashment, refer working note 2. Commuted pension, refer working note 3. Okay, I will get gross salary, standard deduction under section 16 subsection 1. Okay, old tax regime 50,000. Then from here I will get taxable salary. Let me fill everything and come back. Shall we go to the working note? Shall we go to the working note? Okay. Computation of taxable gratuity. Computation of taxable gratuity. Gratuity received. How much is the gratuity received? 25 lakhs. Less exempt under section 10, subsection 10. Less exempt under section 10, subsection 10. Actual received. Okay, 25 lakhs. Okay, 15 by 26. Remember, the employee is covered under POGA. Okay, the employee is covered under POGA. 15 by 26 plus 95,000 plus full DA. 12% of 95,000. 12% of 95,000. 11,400. 11,400 into, remember, he has completed 25 years and 6 months. So I should take 26. So I should, if the employee is covered under POGA, okay, covered under POGA, part thereof in excess of 6 months, up to 6 months, sorry, 24. Yeah, up to 6 months, sorry. In excess of 6 months only, you should take it on the higher side. Here it is 25. Okay, right? Full DA should be 15 by 26 into 1,06,400 into 25. 15 by 26 into 1,06,400 into 25. Is it correct? 15,34,615. Maximum limit 20 lakhs. Whichever is less goes to the outer column. That is 15,34,615. 15,34,615. So I am getting a taxable gratuity of 9,65,385. Computation of commuted pension. Computation of commuted pension. Okay. Receiving gratuity. Remember, the employee is receiving gratuity. Commuted pension received. Commuted pension received 4,50,000. How much percentage is commuting? Not specified. Not specified. Okay. So let us understand that he is commuting 100%. Let us understand. Okay. Less exempt, assuming 100% is commuted. Less exempt, assuming 100% is commuted. 1/3 of the pension. 1/3 of the pension. Assuming he has commuted 100%, 1/3 of the pension will be exempt. 4,50,000 divided by 3, 115. 55. 1,50,000. Taxable leave encashment. Taxable leave encashment. Leave salary received 12 lakhs. Leave salary received 12 lakhs. Less exempt under section 10, subsection 10AA. Actual received 12 lakhs. Actual received 12 lakhs. 10 into average salary. 10 into average salary. My dear friends, please listen. Please listen. For leave salary, only DA forming part. Here that benefit of full DA is not there. For leave salary, only DA forming part. So that will be 10 into 95,000 plus 95,000 into 12% into 30%. Okay, how much it comes to? 95,000 into 12% into 30%. 3420. So 10 into 98 420, 98 420, which makes it 9,84,200. Any doubts? Ask me. Any doubts? Ask me. Is it clear? Is it clear? For remember, here only DA forming part. Here there is no benefit of whether you are covered by gratuity and all. Here only DA forming part. Okay. Recomputation on the basis of days of leave for every year of service. Okay, recomputation on the basis. The question says he has eligibility of 2 months. So he has worked for 25 years and 2 months makes it 50 months. Okay, leave take okay. He took a leave of 12 months. Okay, but for us it is only 25 into 125 minus 12. Are you understanding? Okay, straightforward and simple computation. They have given the information. Okay, 25 years into 1 month, that is what is 30 days, minus 12 months availed, makes it 13 into 98 420. 13 into 98 420. Are you all aware? Okay, it is always multiplied by average salary. Multiplied by average salary. May I know how much it comes to? Once more. Is it correct? Any doubts? Raja, are you following? Online friends, are you following? Can you tell me the amount? 9,65,385. Can you tell me the amount? How much? Somebody also check it. Here, 25. Any doubts? Any doubts? You're clear. Okay. Always work out this question again when you are preparing, or just check the answers once in your notebook. You will be confident of working out gratuity terminal benefits. No problem. If you don't remember the section, please don't write. Exemption under section 10. That's enough. That's enough. I have interacted with all India rank 1 students. I've asked them the same question, not one or two. Many people. Do you think that you wrote all the section numbers? No. Okay. Don't worry about section numbers. In the classroom, by practice, if you get some section numbers, you write it. If you are not very clear, for example, 32 depreciation, you can by practice remember it. If you don't remember it, just less exemption. Normally exemptions are 10, so that you will write. Otherwise, less deduction, less exemption. No. Mrs. Simran is a HR manager in Shiva Private Limited. She gives you the following particulars of her income. Basic salary 70,000 up to 31st July, 75,000 from 1st August, due and paid on the last date. Dearness allowance 25% of basic pay, not forming part. Bonus equal to 1 month salary is paid in July 24 on basic salary plus DA applicable for that month. Contribution of employer to RPF 15%. Motor car owned by the employer exceeds 1600 cc provided to the employee for official from 1st January 2025 for official and personal purposes. Repair and running from 1st January to 31st March were fully met by the employer. The motor car is driven by employee. 10,000 paid as hostel expenses for 2 children. 48,000 paid as educational facility for 2 children in a school maintained by employer. So when the education exceeds 1,000 per month, it becomes fully taxable. You are required to calculate the income chargeable to tax under the head salaries in the hands of the employee. Assume exercise the option of shifting out of default tax regime. Okay. Okay. Shall we start? Basic salary. Okay. 70,000 into 4 plus April, May, June, July. Okay. Plus 75,000 into 8. 70,000 into 4 plus 75,000 into 8. May know? 8 lakh? Dearness allowance, 25% of basic pay. Bonus, 1 month July salary plus DA. So it will be 70,000 plus 17,500. Can you check it? 87,500. 70,000 plus 25% of 70,000. 25% of 70,000. Is that clear? Is that clear? 37,500. You're clear, friends? You're clear? Contribution of employer to RPF of the employee, 15% of basic pay. Excess contribution by employer to RPF. Actual contribution, 15% of basic pay. So how much it comes to? 8,80,000 into 15%. 8,80,000 into 15%. How much it comes to? 1,32,000. Okay. Less maximum allowed 12% of basic pay, because DA is not forming part. So I will take only 12% of basic pay. I will take only 8,80,000 into 12%. So the taxable component will be yes, Raja. Not forming part. So only DA forming part should be considered. Not forming part should not be considered. For PF, HRA, gratuity covered, not covered for everything, basic pay plus DA forming part plus commission as a fixed percentage of turnover. Shall I fix? Okay. Perquisite value of motor car more than 1,600 cc provided from Jan. So it will be 2,400 into 3. It will be 2,000 up to 1,600 cc. It is 1,800 per month. More than 1,600 cc, 2,400. 7,200. It's only from Jan. Hostel expenses allowance for 2 children. hostel allowance, okay, 10,000. For both the child put together, it is 10,000. Less exempt, okay, old tax regime. So I am allowing 300 into 2 into 12. 300 into 2 into 12, 7,200. 7,200. So 2,800 becomes taxable. 2,800 becomes taxable. Okay. Perquisite value of education. The cost per child exceeds rupees 1,000. The cost per child exceeds rupees 1,000. Hence, it becomes fully taxable. Hence, it becomes fully taxable. 48,000. 48,000. Now I get gross salary. Now I get gross salary. 9, 11, 1187, 500. Standard deduction under section 16 subsection 1, 50,000. Taxable salary 1221,900. Sorry, sir. 12 lakh 71. Is this right? Online friends, are you all following? So, anywhere you have a doubt, please stop me and ask. And in revision class, I have a policy of not asking any doubt to the students. Okay. I don't want to make you feel, even if it is a small thing, you might feel that you are. I want you to go back with full confidence. All these are exam questions. All these are exam questions. Maximum one adjustment you can make a mistake. Maximum. Still you are scoring maximum. I don't think you will do a mistake, but I'm just telling you, you will get it very clearly. These are all the particulars given below are for an employee posted in a company in Hyderabad. Basic pay, dearness allowance, 30% of basic pay, 50% forms part. Employee's contribution to RPF, and the employer also makes the same level of contribution. Leave encashment received for that year fully taxable. Remember, if leave encashment is periodically paid, at the end of every year, fully taxable. Only if it is accumulated and paid, it's a terminal benefit. Once more repeating, leave encashment, if it is then and there paid, fully taxable. Okay, only accumulation comes as a terminal benefit. He also received salary in for the month of April in advance without DA in 31st March. Also, he received arrears of the salary of March 24 on the same day, assuming it is taxed on okay, it is taxed on due basis. The employer also spent 74,000 for a refresher course for upgrading Mr. Ramaswamy's skill, not taxable. This is official. This is official. Training expenses for employee, official. Motor car owned and driven by the employee within 1600cc was used partly official, partly personal. Running expenses are borne by the employer 46,600. Compute taxable salary. Assume he has opted out of default tax regime. If in the last question, if he is in default tax regime, hostel allowance I would not have given, but 75,000 I would have given. That is the difference. Let's start. Basic salary, okay, 30,000 into 10 plus 35,000 into 2. Okay, 30,000 into 10 plus 35,000 into 2. Tell me, friend, you have a doubt. 3,70,000. 3,70,000. Okay, DNS allowance 30% of basic pay. Okay, 30% of basic pay. Employees contribution to RPF, you will get 80C deduction. Employees. Employer also made same contribution. Employer's contribution to RPF. Actual contributor, how much is that? Actual contributed is 72,000 less maximum 12% of salary, that is 3,70,000 plus DA forming part. 50% of the DA is only forming part. 55,500. Okay, DA forming part. 12% of, okay, this amount plus 3,70,000 into 12%. 51,060. Is that right? Is that right? Can you please check and tell me? $20,940. Please check it once. Inbuilt include. They won't pay you a basic salary of 370. They will reduce the tax and pay, I mean, PF and pay you. It is inbuilt. Okay. Salary is taxable on due or receipt basis, whichever is earlier. We all know. So, advance salary received in March. You all understand? Advance salary received in March is taxable in that year itself. The question says, he also received salary of the month of April in advance without DA, which is 35,000 per month. Which is 35,000 per month. So this becomes taxable. This becomes taxable. Is the class clear? Okay. Are you understanding this? Okay. And then they say, also he received an arrears of salary for the month of March 24 on the same day, assuming it is taxed on due basis. So that is always taxable. Okay. Arrears received 24,000. What is arrears? Increase with a retrospective effect is known as arrears. Training to employees is official in nature, not considered as purposive. Training to employees is official in nature and it is not treated as purposive. Perquisite value of motor car owned by employee less than 1600 cc. Actual spent, okay, actual spent is 46,600 for whole year. Then less 1800 into 12. Actual spent is 46,600 less 1,800 into 12, 21,600. Just tell me the total. Six double 940. Just check the total. Raja. He also received arrears of salary for the month of, it should be March 24 or March 23 or something like that, on the same date. That is, on 31st March 25, he received the March 24 salary. Arrears is increased with a retrospective effect, taxable in the year in which you receive it. Arrears of rent in house property, taxable in the year of receipt. Oh boy, I don't know where I read them. Sorry, friends. The amount is not given. Sorry. Sorry. It should be nil. Okay. On the same day. For the month of March 24, I'll just check and get back to you. It's an exam question one day. I'll just check and get back to you. Now, as of now, I leave this amount. As of now, I leave this amount. No. Nil. No. What is meant by what is not there in the list? That's what. Other than that, what is not, everything is covered in the list. If there is anything other than that, please ignore it. Ignore it. For example, training expenses. Ignore it. It's fully efficient. That's what there is a, yeah, I agree with you. That's what I was against studying. If they have taxed it on due basis, okay. But they have said arrears. Arrears and outstanding are two different things. Outstanding, they will always tax it on due basis. Arrears, they will only tax it in the year in which it is received. But I'll check your suggested answers and tell you. Okay. Mrs. Vijaya, aged 31 years, working as a finance manager in a company, has been in service since 19 and received the following salary or perks. She joined the service in the grade of 45, 60, 6, 90 on 1st August 19. DA 40% forming part. Company gifted her a smartwatch, 35,000 on her birthday. Two views. You can allow 5,000 is one view. No, once it crosses 5,000, it becomes fully taxable. We'll write both the answers. Okay. CEA for one child, entertainment allowance, motor car below 1600 cc owned by employer from 1st August 24, partly official, partly personal. Employer takes care of expenditure, no driver. Leave travel facility provided by employer to herself, her husband, and one child. Cost of air ticket reimbursed by the employer 35,000. She is eligible for availing exemption this year to the extent it is permissible in the law. The employer also paid professional tax on behalf of the employee. You are required to compute the taxable income assuming she is under 115 BAC. No CEA, no leave-in, LTC, no LTC, no professional tax deduction. She has opted the benefit of the provisions of 115 BAC. Okay, mostly the question will be henceforth 115 BAC. Mostly, because from next year, you will not believe 115 BAC is up to 12 lakh zero from your next year. So everybody is going to go to 115 BAC. 95% of the population would have been moved to 115 BAC. So why will somebody? So examiners will also try to test you in a provision which is more dynamic. Okay, we have worked out some 3 questions in that. We will also, in the last question, I want to write the note. I missed it. Note: employees' contribution is eligible for 80C deduction, because in that question it's only old tax regime. My dear friends, basic salary we need to work out. All of us, please listen. She joined in the pay scale of on 1/8/19 in the pay scale of 45,000. We want the salary for April 24 to March 25. We want the salary for April 24 to March 25. From 1st August 2019, she will get 40,000. From 1st August 2020, she will get 45,000. From 1st August 2021, she will get 50,000. Are you all following? Okay. From 1st August 2022, she will get 55,000. From 1st August 2023, she will get 60,000. And once she reaches 60,000, the increment is 6,000. From 1st August 2024, she will get 66,000. We want the salary for April 24 to March 25. Okay, April, May, June, July. 60,000 into 4 plus 66,000 into 8. 60,000. Okay. For financial year 24-25, 60,000 into 4 plus 66,000 into 8. Is the class clear? Is the class clear? Okay, how much it comes to? 7 lakh? Please take down. Please once always check the calculation, since I'm also doing and the calculator I'm okay. Perquisite value of gift. Perquisite value of gift. Okay. Actual FMV of gift. less exempt. Finally, I'll write the other alternative. Finally, I'll write the other alternative. Friends, may I take 1 minute of your time to make you understand something? Okay, you can remember it till the exam. Suppose if it is falling under IFOS, no, the smartwatch, car, any other articles are not taxable. Okay, computers are not taxable because there we have defined what is movable property. Jewelry, art, architecture, painting, shares, securities. Those are only taxable way. Car received as gift, watch received as gift are not taxable here there. But as an employer, if he provides, it will become taxable. Limit also there 50,000, here 5,000. Okay. Children educational allowance. My dear friends, fully taxable as employee is under concessional tax regime. So 2,500 into 12, okay, 30,000. Entertainment allowance, fully taxable. So it is 2,400 into 12, 28,800. Perquisite value of car, okay, less than 1,600 cc, owned and expended by employer from 1st of August 24. So 1,800 into August, September, October, November, December, Jan, Feb, March, 8 months. 14? Leave travel concession, fully taxable as exemption under section 10 subsection 5, cannot be availed under concessional tax regime. Okay, if we forget to read this, then there will be a problem. Leave travel facility for her husband and one child. 35,000 into 3 per person is 35,000. Okay. The employer also paid professional tax of the employee. Is it a perquisite? Yes, it is a perquisite. Okay. Professional tax of employee paid by employer is taxable in the hands of employee. 2,500. Gross salary. Gross salary. Twelve lakh 85,900. Standard deduction under section 16 subsection 1. New tax regime. So she will get 75,000. Entertainment allowance. Just I am writing and keeping. Section 16 subsection 2. Not a government employee. Also in new tax regime cannot be claimed. Professional tax under section 16 subsection 3 not available under new tax regime. Taxable salary 12 lakh 10,900. Note, there is an alternative opinion that if the value of gift exceeds rupees 5,000, it is only taxable. In such case, the taxable salary will be 12 lakh 15,900. It is better. It is better we communicate to the examiner that I know. If you don't mention also, your answer is right. You will not. But it is better. In the first two questions, if you impress the examiner, then he will never be, he will understand your knowledge. Is it clear? Is it clear? So, my dear friends, these are all the questions which appeared in the past examination. Okay. I'm not yet over with salaries. When I do total income, I'll again do salaries. When I do, I'll do a HRA question. I'll do an RFA question when I do the total income. But standalone questions comes like this only, 7 marks. Okay. I feel it will be more of a new tax regime. Yes, somebody has unmuted. You can go ahead with your question. Go ahead. She has opted out means old tax regime. She has opted for 115 BAC, new tax regime. Can I proceed? All of us, can I proceed? May I? Raja, may I? Yeah. As I told you, my next arena is PGB. My next arena I am going to concentrate is PGBP. I want, because those are all the area, and then I will go to total income. From there, I'll come to house property and small areas later. Okay, house property and capital gains we'll do last, because these are all chapters which always you have a small fear. House property and all, you'll be confident. Don't ask me who said we are confident. I believe you are confident. Okay. Whenever you find time tonight, you can work out and see those questions in house property. Tomorrow, I'll work out in the class so that our classroom time will be same if you happen to working. Now, I'm going to question number 12 in page number 9, business or profession. Messrs. V and Co., a proprietary firm engaged in manufacturing of engineering equipment. On 12th January to 2024, that is last year, it has purchased a machinery for 10 lakh, which was immediately put to use. Why did they give this information? Because last year they have put to use for less than 180 days. They would have only claimed a 10% additional depreciation. This year, the balance 10% needs to be claimed. Repeating, they have started with the information that in the financial year 23-24, I have purchased a new machine for 10 lakhs. Normally, that is an irrelevant information for me because I just need the opening WDV. But this information is given for one purpose. Last year, they would have only claimed half of the additional depreciation. Balance additional depreciation can be claimed this year. During the current year, it purchased as follows: more than 180 machinery, more than 180 motor car, more than 180, sorry, less than 180 machinery. And it is second hand. It is second hand. The opening WDV was 32 lakhs, which include that machinery of. Compute the total depreciation allowable as per provisions. All the assets were put to use immediately. Normal rate of depreciation for all these assets may be taken as 15%. The firm has not opted for one, then only you can claim additional. If they have opted for 115 BAC, no additional. Okay, they has not opted. Okay. Shall we, friends? Shall we? Opening WDV for machinery, it is 32 lakhs. For motor car, please understand, motor car and machinery might be 15%, but they are not same asset. You cannot group them together. What is block? Same asset, same rate. Then you can group. Okay, motor car is no way and machinery. So you will not be claiming additional and all for motor car. Additions. No, sir. Normally motor car 15. Normally itself motor car 15. Put to use for 180 days or more. Put to use for 180 days or more. 12,20,000. 12,80,000. Put to use for less than 180 days. Okay, 18 lakhs. Deletions, nothing is there. Balance available for depreciation, 62,20,000 and 12,80,000. 62,20,000 and 12,80,000. Normal depreciation, 18 lakhs into 7.5% plus 62,20,000 minus 18 lakhs into 15%. You are understanding? For the asset which is put to use for less than 180 days, I can only claim half of the eligible depreciation. So 18 lakhs into 7.5%, 6220 minus 18 into 15%. $798, is that right? 7,98,000. And for motor car, it is more than 180 days, 12,80,000 into 15%. 1,92,000. 1,92,000. Additional. Okay. Again, I am writing. It is not essential that you should write this. Okay. Assessee under old regime. So additional can be claimed. Okay. Friends. 12,20,000 into 20%, plus 10 lakhs into 10%. I'll write more notes there itself. Additional can be claimed only for new asset. For asset purchased last year, only 10% would have been claimed. The balance 10% can be claimed this year. 12,20,000 into 20%. That makes it 2,44,000 plus 1 lakh, 3,44,000. Five zero. No, we will not provide additional depreciation for second one, only for new asset. Yes, sir. That is the last year purchased machinery. This year I have sold also. Last year I have claimed only 10%. This year I can claim that. Can I? May I? Okay. Now, before going into comprehensive questions, some things to pour on your mind. What are all the popular adjustments? Cash payment is a popular adjustment. Cash payment is a very popular adjustment. More than 10,000, fully disallowed. For transport operators, 35,000. Some agriculturists and all, you need not disallow. Relative payment, excess of fair market value, disallowed. If TDS is not deducted or not remitted, 30%. And there are some statutory payments which has to be made before, like bonus, taxes, railway assets. Okay, like these things, you have to make it before interest. These things before due date of filing return. Popular adjustments. Popular adjustments are only cash payment, relative payment, tax not deducted or not remitted, and statutory duties. What are all not so popular adjustments? Sometimes capital expenditure is debited to P&L. All personal expenses debited to P&L disallowed. Depreciation, whatever is there in the P&L, we will disallow and recompute like how we have computed. Okay, these are all only popular. These are all only popular. Let us slowly start and understand everything. Mr. Ayush, aged 50 years, is a retail trader. Normally, these people have 44 AD. I will work out one question in 44 AD also and show 8% or 6% for turnover through approved modes, 6%. Otherwise than by approved modes, which are cash, bearer check, cross check, 8%. Furnished is profit and loss account. Let's start from the credit side. GP. Dividend is IFOS. Agricultural income is not taxable, but later if they say it is foreign agriculture income, it will become taxable. But that is also IFOS. Winnings, IFOS. Now I go to debit side. Rent and rates, salary, interest, admin, general expenses, depreciation, net profit. Rent and rates include GST liability paid within due date of filing returns. No problem. Salary includes 12,000 paid as commission to brother. The commission as per the market value is so 2,000. Even if you don't remember the section, don't worry. Payment to relative in excess of FMB. Administrative charges include 30,000 towards medical expenses of our employees due to fire accident. Normal expenditure, no problem at all. Okay. General expenses include 1,500 penalty. Always penalty means violation of law, disallowed. And 2,500 donation, disallowed. Nothing to do with business. Depreciation provided in the profit and loss account was based on. So they will give us information. Opening WDV, a new plant falling under the same block was purchased on 1st July. Remember, it is retail, not manufacturing. So no additional. One old plant was sold. You are required to calculate the income chargeable to PGBP for the assessment year. Assume Ayush exercises the option of shifting out of the default tax regime. No bigger thing. No additional depreciation is there. No scientific research contribution is there. So whether you are in the default or not default, it's the same answer. Okay. Indicate the reason. Let's start together. Okay. Continue. 445, 100. He's threatening the whole class. Okay. 445, 100. Remember bodybuilder and all of it. Okay. Right. Friends, always it is easy to first do what is minus. In exam also, try to play with the mind of the examiner. Easiest thing is less because you know what are all should be reduced. This dividend. Okay. So the examiner will always feel you are on track. Okay. Not necessarily first I should add only, then I should less only. Don't have that as prefixed. Less items credited, dividend taxable under IFOS. 15,000. Agricultural income 1,85,000. Winnings 10,000. 500. Yeah, you can allow, yeah, you can. I will allow the following expenditure. You can do that. But this is the most popular way the examiner looks for. Majority of for professionals, or when they give receipts and payments account, you can take the receipt minus allowable expenses. When they give a P&L account, the examiner expect you to go from the net profit. Rent and rates allowed, salary allowed, interest. First, I will disallow depreciation. May I? May I? Okay. Less depreciation as per IT law. I'll work here itself. We can work here itself. Okay. Opening WDV. Opening WDV. The written down value of plant and machinery 15, 4,35,000. 4,35,000. And then they say a new asset falling under the same prop purchased more than 180 days. Purchased and used for 180 days or more. The value being 85,000. Less deletions. The value of deletion being 52,500. Balance available and depreciation at the rate of 15%. So the balance available is, okay, 4,35,000 plus 85,000, 5,20,000 minus 52,500. How much is the balance available? 67,500. On this 15% comes to 70,125. 70,125. Is this clear? Okay. Taxable business income. May I know how much it comes to? 445 100 minus 210 500 plus 118 500 minus 70 125. 2,82 475. Note, not 470. Note. Okay. Whatever we have. Okay. Administrative expenses. GST payment on rent. Or allowed as deduction. Just write a note. I am not disallowed because they are general business expenditure. Coming, this is a retail trade, no additional depreciation. They are in the business of retail, not manufacturing. Friends, I'm also taking the question asks you to compute. You are required to calculate the income chargeable to tax under PGBP. Actually, the answer is over. You are asked to do only PGBP. Asked to do only PGBP. I am additionally giving you total income. In the exam, don't do this, or you don't want me to do, I'll not do. But I'm just telling you how to compute the total income. Also, okay, computation of total income additionally provided. Okay, so business or profession as computed 2,82,975. Income from other sources, dividend, $15,000. Agricultural income from India, exempt under section 10 subsection 1, not taxable. Winnings, okay, gross amount taxable 15,000, that is 10,500 plus 4,500. Gross total income, 3,12,975. Deduction for donation under 80G, 30% of amount donated. I think the amount donated comes to 2,500. Yeah, we are not looking at 10% ATI. That PGBP itself is very high. Okay. This I additionally worked out. In examination, it is sufficient if you compute the business income. Progressing. Mr. T and U is a partnership firm having two partners, Taresh and Umesh. The firm furnishes the following profit and loss account. On the credit side, gross profit, rent receipt. On the debit side, rent, salary, general expenses, depreciation, payment to partner, interest. The partner's interest should not exceed 12% per annum. And remuneration is based on book profit. Okay, net profit. Additional information. The firm has brought forward loss amounting to 20,000 and unabsorbed depreciation. Interest is paid to Taresh at 16% per annum. The firm took a loan from Taresh. The Schedules Bank of India charges 20%. The partnership deed does not contain the clause relating to interest. Nothing can be paid. Either as per deed or as per law, whichever is less. Deed is zero. Law may be 12%, but zero. Partnership deed authorizes Umesh to receive salary. General expenses include 40,000 paid to Mr. Som, on which tax were needed to be deducted but not deducted, 30% disallowance. Depreciation as per IT law. You are required to compute PGBP in the hands of the firm. Shall we start? 12%. Interest on capital, yeah. It is for interest for any interest for the partner. That is your partnership law. So, for the question which you asked me, then everybody will not give capital, only loan they will give. Got your point? Come on, fast. Let's not waste time. Net profit, nothing else. Raja, you're stuck. What you now get is known as book profit. Remember, in a firm, we need to compute remuneration for partner. So before computing remuneration, what we get is known as book profit. 287 minus 360 plus 984 minus 54. 8 lakh. May I? May I? As per deed, 6,40,000. As per act, please listen. Please listen. On the first 6 lakhs, 90%, which comes to 5,40,000 or 3 lakhs, whichever is higher. So if it is 3 lakhs, you can pay 3 lakhs. If it is 2 lakhs also, you can pay 3 lakhs. If it is if 90% is more, 540, and on the balance at 60%. Repeating, okay, 8,57,000 minus 6 lakhs into 60% plus 5,40,000. 2,57,000 into 60% plus 5,40,000. 6 lakh? 94, 400. 200. So whichever is less goes to the outer column. 6,40,000. Please check it. Yeah, I will. I will. Okay. Note section 40B remuneration. Okay. Section 40B remuneration. On the first 6 lakhs of book profit, 90% of such book profit, that is 5,40,000 or rupees 3 lakhs, whichever is higher, whichever is higher. On the balance, 60%. For partners means 12% if it is mentioned in the deed. Last year, up to 3 lakhs, 90% or 150, whichever is higher. More than 3 lakhs, 60%. Please, yeah. Okay. Okay. Upper book profit they are. Please don't. Yeah. Suppose if there is a loss, I can still pay remuneration and separately set off unabsorbed or carry forward unabsorbed depreciation. Please follow. May I, friends? May I? Okay. Mr. Aman, engaged in retail trade, reports a turnover. You want time? You completed all of us? Okay. Reports a turnover of 2 crore 99 lakhs. Once more, I will tell you 44 AD. Normally 44 AD, 2 crores. But if the cash receipt does not exceed 5% of total receipt, you can go up to 3 crores. Okay. Amount received in cash is 1350 and balanced by approved modes. His income from the said business as per books is 14,50,000. Compute as per the provisions of PGBP of the income. Retail trade is the only source. This is the first year for which he is going to declare his business income in accordance with the provisions of 44 AD. Decide whether Mr. Aman is eligible for presumptive computation. If yes, determine his income as per the applicable provision, clearly indicating the treatment. Total turnover. How much is that? Total turnover 2 crore 99 lakhs. Total turnover 2 crore 99 lakhs. Turnover otherwise than by approved modes is 13 lakh 50,000. Percentage of turnover through unapproved modes. Okay, nothing but 1350 divided by 2 crore 99 lakhs into 100. Since turnover otherwise than by approved modes is less than 5%, assessee is eligible for presumptive computation up to a turnover level of 3 crores. Eight percentage of May I? Okay, I'm just writing some notes, not for examination, but I believe that after today's class, you will hold only this material for preparation. You can just put aside all those things, other things, and hold this for your preparation. For that purposes, I am writing these notes. All expenses are deemed to have been allowed if there is unabsorbed depreciation. The same is also deemed to be allowed. Brought forward business laws can be adjusted when it is said all expenses are allowed, even remuneration and interest is deemed to be allowed. Yes, possible. From here on, 5 years, you should be in present time. The year you are opting for, till last year, I maintain book. This year, I am computing presumptive. Next 5 years, only presumptive. If you opt out, the subsequent 5 years, you cannot go by presumptive. Once presumptive was opted, minimum 5 years. Business loss, yes, not unabsorbed. Can I? Mr. Gopal is a proprietor of his business, P&L. On the credit side, GP, interest, rent. Debit side, establishment, rents, rates and taxes, sundry expenses, household expenses. Directly we can disallow this because it is a provision for bad debts, loss on sale of motor car, salaries, insurance, including life insurance, not allowed. Interest on bank loan, depreciation. Additional information, bad debts written off, admissible depreciation as per IT law. The assessee is running his business in a rented property, half of which is used for his residence. Rent of 2,400 in respect of entire house is included in the rent rates and taxes. The balance 500 is on account of municipal taxes paid for property given on rent. Compute income taxable under business or profession. Does not opt for 115 BAC. Read through. My dear friends, okay, the rent rates and taxes of 2,900. The rent rates and taxes of 2,900 consist of 2,400 as rent and municipal taxes of 500. For the same property, 50% is used for proprietor's residence. So only 50% will be allowed. Even municipal taxes are allowed. If you pay for a rented property, it is allowed. If it is fully used for business, you could have claimed. But here, only partially used for business purposes. So, only partly you can claim. So, 1,450 will be disallowed. Why they are giving personal car is you need not reduce it from the block of asset for computing depreciation. That's why they are giving it as personal car. Profit on sale, loss on. So I have a 6,000 rupees of asset. I sold for 8,000. In my books of accounts, I will put profit on sale of asset 2,000. But for our income tax law, the entire 8,000 will be reduced from the block. Opening WDV, addition, less deletion 8,000. There is nothing called loss or profit. Suppose because of that block goes out of existence, capital gains. So there is nothing. Close your eyes and disallow. It is sold for a loss of 1,000, which means so a sale value is 4,000. I will reduce it from the block. What's that? 520. Since provision I am disallowing, bad debts I should allow. Because in the books, they would have adjusted actual bad debts against the provision only. In the books, in our 11th, 12th and all, we will do. If there is an actual bad debt, that will be adjusted against provision only and not separately. 500? Yeah. Yeah, 1450 consists of two things. 2400 rent, 500 municipal taxes. On 2900, we have disallowed 50. Is it clear? Okay. Repeating this because you will always feel in our regular classrooms, we did questions which are having 10 adjustments, far more. And in revision, we are working out only 5 adjustments, that too simple. All are examination questions. I have, by God's grace, we have prepared ourselves for worst case adjustments also, so that the questions become simpler. I am not anywhere exaggerating. Everything I am working is exam questions. May I? May I, friends, all of us? In total income, I am again going to work salaries, business or profession. Do not worry. Shall I move on? Okay. To total income, where we will work out extensively everything. Extensively everything. Okay. Before, why I am completing the key areas today is for 2-3 reasons. One, if you have any doubts when you go back today, you can come and get it solved tomorrow with me. That is one thing. Second thing is, you will get confidence when we work on these things. It will cover all extensively everything. Third thing is, worst case scenario, if there is a big rain tomorrow also, I'm not losing track of what I will definitely, I'm keeping Monday, Tuesday also free myself, so that I can definitely step in on. But if it is raining, we don't know. I don't believe, I don't think anybody predicts. Okay. I don't think anybody predicts. They have been predicting this. And okay. I have regards for all the private predictor and IMD, no doubt about it, but I don't know. Nobody is able to predict correctly. So I'm preparing for the worst case scenario also. Having said this, I want to also give you one more thing, which is part of my sentiment. If we are having class tomorrow or any other day, which if it is heavily raining tomorrow, on any other day, I have a small sentiment of taking you to a temple nearby. Okay, it's in Tinagar only. Okay, so I wish that we go to the temple tomorrow after the class around 10:15. If we leave from here, we can go to the temple also. I'm planning that online students, if it is possible, you can also join for the temple. I'll take the decision tomorrow morning regarding that. But I wish if you are available and if you can join, it will be good. Okay. Rest of the things we'll speak during the break. I'm going to total income. The total income chapter will also cover the losses, will also cover set of losses. Tell me. Yeah, you can. Which didn't match? But there's nothing called municipal taxes cannot be even in our house property. If we take 50% self-occupied, 50% rental, and if they give you municipal taxes 3,000, you will split it into 1,500, 1,500. Please remember, do not, it is, I'm very sure it is 2,900 into 50%. It's personal expenses only. That's the only difference or any other difference? How much is the answer? 1,81,920. How much are we getting? What's the difference? 250? That's the difference. 250 was the only difference. That should be the only one, but be sure it is 100%. I'm going into page number 18. Mr. Sadanand, a resident individual aged 54 years, gives you the following particulars of his previous year. Income from salary computed. Net annual value of house property 170. Income from so what is given is NAV. Please remember NAV. We know standard deduction 30% can be provided, and if at all any interest, that same can be provided. Income from textile business before providing depreciation. Income from speculative business. LTCG on sale of building. Loss from on maintenance of race horse. Loss from gambling. Unabsorbed depreciation. I need not see the year, it is allowed. Indefinite period. Loss from speculative business. 4 years only it can be carried forward. We are in assessment year 25-26. This is 21-22. 22-23, 23-24, 24-25, 25-26. Yes, you can adjust. STCL only last year, but you don't have capital gains at all. It is available for adjustment. Compute the gross total income, assuming he has not opted for default tax regime under 115. Also list out the losses to be carried forward, specifying the assessment year up to which the loss can be carried forward. Okay. Had it been default tax regime, house property in this case, okay. If there is a house property loss, the treatment is different. I have questions, don't worry. Now let's start slowly working the gross total income. Always go headwise. current year depreciation is the first to be deducted, 65,000. Current year depreciation is the first to be deducted, 65,000. Is the class following? Is the class following? Okay, 65,000 current year depreciation. Brought forward depreciation, 10,000. Can STCG brought forward be adjusted against LTCG? Yes. STCL can be set off either against STCG or LTCG. Ulta is not possible. What's the total? 18 lakh. Loss to be carried forward. Race horse loss for 4 assessment years. Okay, so we are in assessment year 25 26, 26 27, 27 28, 28 29, 29 30. Unabsorbed adjusted, speculation adjusted, STCL adjusted. Shall I? Question number 26. Mr. Sumit, a resident individual aged 35 years, gives the following information to you relating to his financial year. Loss from self-occupied property. If it is old tax regime, only up to 2 lakhs. Okay. If it is new tax regime, 0. You cannot claim it. Income from buying and selling of shares of listed company. There were no delivery of shares involved, which is what is known as speculation, where actual delivery is not there. Loss from other speculation. They themselves say, look how the question gives you a clue that the previous is a speculative is loss from other speculative business. Salary income. STCL on sale of depreciable asset. LTCG on sale of residential. Lottery income. Brought forward business loss relates to assessment year 22-23. Business discontinued, still you can claim. You are required to compute the total income of Mr. Sumit, assuming he is under default tax regime, which means house property ruled out. Okay. Also, so specify the amount of losses to be carried forward up to which year. Self-occupied house property will have only one thing as deduction: interest. That is not allowed under 115 BAC, so you cannot claim. If suppose, I'll give you two circumstances. Let out property. One property I have income, one property I have loss. You can claim under both regime. Self-occupied property. You can claim only under old regime up to 2 lakhs. New regime, not at all possible to have a loss in self-occupied property. So suppose you have an income under let out property, loss under self-occupied property. Under old regime, you can set it off. Under new regime, income is taxable, loss cannot be adjusted because there cannot be a loss for self-occupied. Is only for old regime. Even the let out loss remaining should be carried forward. Kannan, what is okay, friends? I have a speculation income this year of 4,50,000 and also a speculation loss of 1310. I want to tell you something. There is a case law which says share sales are not speculative. For shares, futures, and derivatives, if it is of business nature, at the inter-level, please disregard that. I know in our material they might have given it to you, also alternative answers, etc. But please disregard it. Consider this also as speculative. And the wordings itself is loss from other speculative business. So this can be set off and the balance needs to be carried forward. The balance needs to be carried forward. There is already a business loss which is brought forward. That also further carry forward only. We will write it as a note. It is computed. If the word computed is appearing, they have provided standard deduction. If they give you gross salary, we should compute standard deduction. Hmm? STCG, LTCG are acceptable. RPF is allowed. GTA itself is allowed. Gross total income. Even in our forms, it is acceptable abbreviations are there. This is business laws of assessment year 22-23, 23-24, 24-25, 25-26, 26-27, 27-28, 28-29, 29-30. Up to 30 they can carry forward. This year speculation loss 26-27, 27-28, 28-29, 29-30. 8,60,000. STCL of 25-26. Okay. 26-27, 27-28, 28-29, 29-30, 30-31, 31-32, 32-33. May I? Sure, Karan. Business laws of 22-23, right? 23-24, 24-25, 25-26, 26-27, 27-28, 28-29, 29-30. Stand corrected. Stand corrected. So this will also be 33. I think I did only 7 years. Okay. I normally ignore that particular year and worked out. Sorry. Anupreet provides you the following information of income or losses: salary, loss under the head house property, profit from speculation, loss from non-speculation, loss. Can we set it off? Profit from speculation business, loss from non-speculation business, yes, can be set off. Reverse only is possible, not possible. Loss from other sources, loss from LTCG, profit from STCG, carry forward speculation loss from 2021, unabsorbed depreciation. You are required to compute the total income of Mr. Anupreet for the assessment year, showing clearly the manner of set off and items eligible for carry forward. He filed income tax return every year. He does not opt 115 BAC. So house property loss can be adjusted. IFOS can only have racehorse loss. No other loss is possible in IFOS. Yeah, expenses are not allowed. Royalty income. Okay, expenses to that extent will only be allowed. Very rare. I agree with you. But majority of the time, royalty commission will all be business income, though we have taken it as allied activity. Loss from IFOS, if they give, take it as house property loss. I'm sorry, take it as racehorse. We shouldn't set it up. It can only be carried forward. How does your material? I'll also check your material. 2021 means 21, 22, 22, 23, 23, 24, 24, 25. 5 years is already over. 5 years, 4 years is already over. 4 years is already over. 26, 27, 27, 28, 28, 29, 29, 30, 30, 31, 31, 32, 32, 33, 33, 34. What note they have written? Good. You take it this, as racehorse and carry forward it. Because yeah, assume that what they have done is also assumption. Loss from other sources is that too to the extent of 3 lakhs. The interest, dividend, okay, popular, leave royalty commissioner, interest, dividend, subletting of property. In no cases it can come to 3 lakhs. Dividend at all, you restrict to 20%, which means only income can come. Racehorse is the only possible. Can I? You want to take the break and come back? Yeah. Okay. We continue. In this question, the speculative loss continues for one more year. Sorry. I wrongly read it as previous year. I am assessment year. It is previous year 2021. So this is the last year. So what happens here is so here you can set off, you can only set off 2,50,000. I read it as assessment here. I'm sorry. Okay. So here it will become nil and less three lakh unabsorbed depreciation against any income it can be set off. So some 1,65,000 is there as unabsorbed depreciation. So what happens is 5 minus 2, 3, 340 minus 165, 1,75,000. Please change your answer. I read it as current year, assessment year. Actually, I read it wrongly. It is previous year 2021, not assessment year 2021. I read it as assessment year 2021 and said 4 year period is over. A friend corrected me saying, no, it's previous year 2021, because of which that loss can also be set off. Shall we? Mr. Rajesh, a resident individual, aged 45 years, furnishes the following particulars of his income. Income from garment business, STCG on transfer of shares on which STT is paid. In the year 23-24, he had gifted 1 lakh to his son who was aged 10 years. In the same year, the gifted amount was deposited. The company was paying 12% interest per annum. He made the following payments. Life insurance premium paid for his life, 80C. Contribution to PMNRF, 80G. Calculate taxable total income and tax liability under the 115 BAC and regular provisions also. And regular provisions also. Tell me, my dear friend. And regular provisions also. Computation of total income of Mr. Rajesh. Particulars. Regular 115 BAC. Regular provision and 115 BAC. Business income 10,80,000. 10,80,000. STCG on which STT is paid 1,40,000. 1,40,000. Clubbing of minor son income assuming his income is higher than that of spouse. 12,000 12,000 less 1032 exemption for clubbing. How much is that? How much is that? 1,500 rupees. You can only claim under the old tax regime, not under the new tax regime. 1,500 dash. Gross total income 11, 1220, 1232. Is this correct? $24,000 dash. You cannot claim it under the new tax regime. PNMNR of donation 50,000 dash. Yeah, sure. No, more than 2,000 if you pay in otherwise than by approved mode. No. ATC, yeah. Yeah, yeah, yeah. Yes, yes, boss. RPF is deducted from your salary. PPF, yeah, yeah, yeah. It's paid to bank. Shall I? Shall I? You want to? STCG taxable under section 111A at 20%. Nothing but 1,40,000 into 20% in both the cases, 28,000. 28,000. Income taxable at normal slab rates. In the first case, 11 lakh 56 500 minus 1 lakh 40,000 makes it 10 lakh 16,500, right? 10 lakh 1156 500. Is that's not right? Huh? 10,16,500. Okay, 16,500 into 30% plus 1,12,500. Not a senior citizen, I believe. Rajesh, aged 45 years. So 16,500 into 30% plus 1,12,500. 450. 117,450. 117,450. Okay. On the other hand, okay, 12 lakh 32,000 minus 1 lakh 40,000. 12 lakh 32,000 minus 1 lakh 40,000. 10 lakh 92,000. Friends, first 3 lakhs nil. Next 4 lakhs 5% 20,000. Next 3 lakhs 10% 30,000. Are you understanding? So 92,000 into 15% plus 50,000. Repeating, first 3 lakhs nil, next 4 lakhs at 5% comes to 20,000. Next 3 lakhs at 10% comes to 30,000. So up to 10 lakhs, it is 50,000. More than that, 92,000 into 15% plus 50,000. No, I didn't have it. Tell me, Raja. Special plus norm. Mr. Ram, an resident individual, aged 46 years, owns two residential house properties, of which one is used for self occupation and the other is let out for a monthly rent of 65,000. He bought these houses by taking a loan from a nationalized bank. During the financial year, he paid interest on housing loan 210 each for both the houses and principal 250 each for each house. Mr. Ram is also doing iron business by name Ram Enterprises, in which his income amounts to 960. You are calculate the total taxable income and tax liability for the assessment year under the default tax regime. Self-occupied property, you cannot claim anything of the income tax all, and also under the regular provision of income tax act. Advise Mr. Ram whether he should pay tax under default or under regular provisions. Self-occupied, okay, NAV nil. Interest on borrowed capital restricted to 2 lakhs. Here nothing can be claimed. Here nothing can be claimed. Loss from self-occupied property minus 2 lakhs. Here nothing. House property let out. Rent received 65,000 into 12. 780, right? 65,000 into 12. 7 lakh 80,000. There is no municipal taxes and all given. There is no municipal taxes and all given. 30% standard deduction under section 24A. 30% standard deduction under 2 lakh 34. Income from let out property, okay, 544. 546. Net income from house property. Okay. 3,46,000. After adjusting loss on self-occupation. Here it is 5,46,000. For whom? 65,000 received. Yeah. The payer has to deduct tax. I accept with you. Income compute, you should take the after computing tax, less already paid taxes, TDS. Business or profession as computed. Deduction under section 80C, principal repayment of housing loan restricted to 1,50,000. Here I cannot claim. Here I cannot claim. There is no special rate here. Base tax 1,56,000 into 30% plus 1,12,500. I missed out. Sorry, friends. Let's please take this up. I'm sorry. Yeah, while reading, I read each. Fully you can claim. So this will become 3,36,000. 0 to 3, 5%, 3 to 7, 0 to 3, nil, 3 to 7, 5%, 7 to 10, 10%, 10 to 12, 15%, 12 to 15, 20%. Clear? Shall we? You can see the big difference, no? You are allowing house property of 2 lakhs. You are allowing 150 of 86. Still, concessional tax regime is better. If this year itself is like this, imagine next year, 12 lakhs, you will get a rebate. So, testing should be like this. That is, the question can be like this. Work out both. But it cannot be exclusively old tax regime like how in salary we saw. Because more people are dynamically moving into concessional tax regime. Examiners are also aware of it. So they will also be on par with the concessional tax regime. Shall I? Pavan, aged 36, resident individual, following particulars. Annual value of lettered property, profit and gains from manufacturing business after deducting normal and additional depreciation, interest on FD, yeah, call me. Interest received on company deposit, savings bank interest received by minor son. He contributed the following: Sukanya Samriddhi 80C, RPF 80C, PMNRF 80G. Calculate total income and tax liability for the assessment year under default, as well as optional region. Advise which way he should pay it. Okay. So if these type of questions are asked, the important thing is the question will be very simple because the working is higher. The working is higher. Okay. So the question will be, if it is a single tax system, they will give you some intricacies at least. But if it is a both tax system, it will be a straightforward question. $60,000, $60,000. Very, very painful words. Net. Okay. We need to provide standard deduction. We need to compute standard deduction. Okay. Come on, together, please. Together, please, together. Profit of business without allowing additional depreciation that cannot be claimed under concessional tax regime, that cannot be, so you will add back and make it as 5,40,000. Sorry, it's not correctly mapping, but please understand this is 5,36,000 and that is 5,40,000. Are you understanding? Are you understanding? Other sources. Focus. Let's not focus out, please. Okay. Interest on FD. Interest on FD, 1 lakh. 1 lakh. interest on company deposit 60,000. Clubbing of minor child interest, assumed income of assessee is higher than that of spouse. 1,000, 1,000 less 1032 exemption for clubbing. You can only provide 1,000 because income is only 1,000. You should not provide 1,500. When the income is 1,000, you can only provide 1,000. Okay. And here you cannot claim it. Gross total income 42 plus 536. $25 plus 30, 55,000 nil. There are no special rates. 1 minute. 1 minute. 1 minute. Yeah. Savings bank interest, I thought something is there. So that 80 TTA, only for minor, that we have allowed it as deduction directly. So there is no 80 TTA and he is not a senior citizen. If he is a senior citizen, then 50,000 can be claimed under 80 TTB. He is not a senior citizen. So it is not savings bank interest. You cannot provide it. Okay. Base tax. 1,63,000 into 20% plus 12,500. 45,100. 43,000 into 10% plus 20,000. 4,300, 24,300. Kannu, Kannu, is that clear? Shall I move on? Yes, sir. Can I proceed? Can I? Jyoti, aged 46 years, resident individual, gross salary, loss from house property, self occupied, interest on savings bank, deposit in PPF 80C, dividend from Indian company, life insurance premium paid on dependent father will not qualify. Only for assessee, spouse, children. You are calculate the total income and the tax liability and advisor whether should she opt for normal or other. No, sorry. Can 2,37,740. And next year, for that income level of 937, it will be nil. New tax regime. Zero. Up to 12 lakhs rebate will be claimed. Surcharge தான் ஸ்பெஷல். அதுவும் 2 crores மேல. Normal. Raja.
சார் எல்டிடிடிஏல வந்து இப்போ சேவிங்ஸ் போஸ்ட் ஆஃபீஸ் அது ஏதோ வரும்போது இந்த எக்ஸாம் 3000 ஏதோ வருது அது எதுல சார் வருது
3,500 exemption for post office time deposit scheme.
அப்ப அது அந்த
That will
3000
not come under 80TTA.
ஓகே அது அப்ப அது எதுக்குள்ள சார் வரும்
Time deposit scheme.
ஓ அதுக்குள்ள
Clear? Is it so? No, I think it's correct, my dear friend. Prakash, aged 41 years, is a resident with a disability. 80U can be claimed for 75,000. 80U can be claimed for 75,000. Normally, above 80%, 1,25,000. He provides you the following particulars: dividend, interest, honorarium from school of orphanage for giving his part-time service. He has donated 20,000 to the school for orphanage, which is approved as a charitable institution, and 2,000 to PMNRF, 20,000 to PFPF, and also 3,000 medical insurance premium of his dependent son. His father is also a person with disability and is dependent on him for medical treatment. Prakash spends 8,000 during the year on him. Compute the total income of Prakash, assuming he has not opted the default tax regime and comes under the normal tax regime. More for deduction, this question is. ATI will come to 274 minus 20 minus 3 minus 75, 75 2. So 150, 170, 175, 175. So 99,000 into 10% or amount donated 20,000, whichever is less. So 9,900 into 50%. Repeating, ATI is nothing but 274 minus all deduction claimed. I think it comes to 99. Can you quickly check in the calculator? Oh, 1 lakh 1,000. Yeah. Yeah. So it will be 10,100.
Sir, 1,01,080 and then 2,080
We should not take. Can I? Ankita, aged 50 years, a resident individual and practicing company secretary furnishes you the following receipts and payments account for the financial year. Okay, this should be payment. On the receipt side, fees for professional services, rent from house property, motor car loan from SBI, interest on savings bank account. So this is IHP, this is PGBP, this is IFOS. This information will be useful for computing what is the interest depreciation of the car on the payment side. Staff salary, other administrative expenses, office rent, housing loan repaid. So 188, 80 is interest, remaining 1,08,000 is principal portion. 80C can be claimed. Life insurance premium of her spouse allowed. Motor car acquired on 1st Jan by account payee check. Medical insurance 80D. Books purchased on 1/7/24. Annual publication by account payee check. It is not an asset. It is known as annual publication. Only if it is a long-term asset. This is every year you are all subscribing to your magazines, etc. Okay, so that's it. Computer acquired on 1/12 by account pay check. Public Provident Fund 80C. Motor car maintenance. Closing balance of cash and bank. Following further information. She occupies 50% of her of the building for her own residence and let out the balance residential for monthly rent of 5,000. The building was constructed during the year when the house loan was obtained. Motor car was put to use both for official and personal purposes. 1/5 of the car is personal. The written down value of the assets are furniture, fixtures, plant and machinery, computer. On the basis of the given information, you are required to give the following answer, assuming assessee has shifted out of the default tax regime. A. Compute the income chargeable under the head house property for the assessment year. So, CS has this practice of asking a question, splitting the questions. Compute headwise. Like they give you the step mark directly. They give you the step mark directly. For example, this will be some 20-mark question. 5 questions, 4 marks, 3 marks, 5 marks, like that they split. Business 5 marks, house property is simple 3 marks. So by doing one question, we are covering a lot of chapters. That's what is the logic behind such things. Okay, let's start. So what happened? She occupies 50% of her building for her own residence. Remember, 50% of interest goes to self-occupied property. Okay, and also 50% of municipal taxes. I don't think it's there, but if at all there, we'll take it. And the balance is let out for 5,000 per month. That's what you see here as the 60,000 rent from house property. Housing loan repaid 188, 80 is interest, 40 belongs to let out portion and 40 for the self-occupied portion. Shall we start? Okay. Is there any municipal taxes on the credit side? Do you see anything as municipal taxes? No, there are no municipal taxes. 30% standard deduction under section 24A. Net annual value, oh no, sorry. Interest on borrowed capital split equally. $40,000. Income from house property 2,000. 40,000. Net income from house property 38,000. So this is 3 marks for you. This is how they split the question. Part 2 question is compute total depreciation allowable under the head PGBP. Okay, look at how the splitting is. This is also another 3 mark. Like that, in a CMA lengthy question, this is step mark. Here they themselves say, for this step I'll give you this much, for this step I'll give you this much. So how many assets are there? Furniture, plant and machinery, computers. Furniture, plant and machinery, computers, motor car. Furnitures, plant and machinery, computer, motor car. Remember, book is not an asset. Remember, book is, it's an annual publication, so it is not an asset. Consider it as an asset. When is the computer purchased? Computer is purchased on 1/12. Motor car is purchased on 1st Jan. Both are less than 1. Always check on the receipt side whether they have given any sale value of asset. Always check on the receipt side whether, oh, if it is not given, fine. But always have idea, because when they give receipt and payment, you should be all the more careful, because it's not profit or loss. It's the sale value that might have been given. In this question, nothing. Depreciation. Here it is 10%, 6,000. Here it is 15%, 12,000. Here it is 50,000 into 40% plus 30,000 into 20%. 50,000 into 40%, that is also 20,000. 30,000 into 20%, that is 6,000. Is it 26,000? Is it 26,000? And here it is 4,25,000 into 7.5%. The third question is, compute the total income chargeable under PGBP from business or profession for the assessment year. Okay, it's a general question. I'm going to work out how to compute PGBP. But something interesting when I was noting down is, gross receipt is 50 lakhs. If she wants, she can go under presumptive basis, 44 ADA. 50% of the income will be taxable. I thought they will ask which is better, but they have not asked which is better. So we'll do as per books, because books are maintained. But one of the advantage she has is her gross receipts has not exceeded 50 lakhs. Please remember, if it is not exceeding 50 lakhs, 50% directly you can declare also. And if the gross receipt does not if the otherwise mode it does not exceed 5%, up to 75 lakhs. Like how we saw 2 crore and 3 crore. But in this case, no issues. Oh, the expenses are high. That's why. Oh, I should have put 4/5 of motor car. I'll change it. Motor car expenses. 1/5 is personal. That's what the question said, right? 1/5 is personal. 4/5. I will put it here when I'm doing the depreciation. 4/5. 20,000 into 4 by 5, 16,000. Depreciation. My dear friends, I'll do that. 6,000 plus 12,000 plus 26,000, 6,000 plus 12,000 plus 26,000 plus 31,875 into 4 by 5. Total. That one, no, 25,500. 25, 46, 58, 64,500. 69. 18, 29, 49. You said 25, right? 69. Can you please check once? 69,500 is right. So what is the total of expenditure? It is 21 plus 1150, 3250, 3280, 33, 3316 plus 69,500. Oh, I wrote it wrongly. Huh? Here it is 26. Okay. Okay, friends. Did I miss anything? I hope I've covered everything. Motor car, return down values, and the last part of the question is compute. So there are two more parts. Compute total allowable deduction under Chapter 6A. ATC. Okay. Nothing there in the information. So we go from the top. ATC, principal portion of housing loan. Housing loan. I'm getting 188 minus 80, 1,08,000, both put together only. Life insurance premium of spouse 24,000. Medical insurance is 80D. PPF contribution 20,000. Total under 80C 128, 140, 132, 1,52,000 it goes, but you can only claim 1,50,000. But you can only claim 1,50,000. 80D medical insurance. 80D medical insurance 18,000 you can fully claim. I think there is a savings bank interest that is there. 80 TTA savings bank interest, okay, which comes to 10,000. Total deduction under chapter 6A 160, 1,78,000. House property, I think we had a loss of, what is the loss of house property? 38,000. Business or profession, we had an income of 500. And IFOS interest on savings account, I had 12,500. Gross total income comes to 16, 15, 16, 27 minus 38, 1589. Chapter 6A deduction comes to 1,78,000. 11, 14, 11.
Please. My then. Thank you so much.
Is it clear, friends? That was one of the finest questions where we had a superb idea about the various chapter, consolidation of various chapter. Even if this question, everything will become a working note, computation of total income should be the main answer. Bajrang, aged 50 years, a resident engaged in the business of textile at Chennai. His wife Usha is employed in ABC Limited as accounts officer. She furnishes the following details: basic salary, dearness allowance, lunch allowance, medical allowance, children educational allowance 2000 per child for 2 children, house rent allowance, actual rent paid by her to her husband in Chennai per month. Contribution to PPF 1 lakh in her account and 40,000 each in the name of 2 minor children. Bank FD interest, savings interest. His husband furnishes the following: turnover of retail trade. He does not maintain books of accounts for his business. Whole of the sale money is received in cash, so 8%. Rent of vacant land, rent of let out property, arrears salary received from ex-employer, gift received from relatives on the occasion of marriage, birthday, gift of motor car from a friend outside India, cost of motor car 5 lakhs, friends. 5 lakhs, but it is not taxable. It is not taxable because gift of car, immovable property will not include that. Eligible amount of brought forward business loss relating to wholesale trade. The business was discontinued, 3 lakhs. sold a vacant land for 14 lakhs whose stamp value is 15 lakhs. The vacant land was acquired for 2 lakhs. Deposit in 54 EC bonds 9 lakh. Based on the above facts, answer each of the following questions separately. Question A. Compute taxable capital gains in the hands of Mr. Bajran for assessment year 24-25. Shall we, friends? Shall we? Full value of consideration by adopting section 50C of the law. 50C says if the stamp value exceeds 110% of the consideration, take stamp value only as full value of consideration. Otherwise, normal. Okay, now actual consideration. How much is that? Oh, 14 lakhs. 110% of actual consideration. 15 lakh 40,000. 110% of actual consideration. 15 lakh 40,000. Stamp value 15 lakhs. Since stamp value has not exceeded 110% of actual consideration will become full value of consideration. Actual consideration less cost of acquisition, cost to the previous owner. Gross LTCG 12 lakhs. Gross LTCG 12 lakhs. Exemption under section 54 EC. They have invested 9 lakhs. Is it within 4,325? And they have invested in 10,525. So I again repeat, for our CMA friends, this can be a standalone question. We work out tomorrow some capital gains. You will see this as standalone question. Okay. But here it is 5 questions to Can I? B. Compute the taxable HRA in the hands of the assessee on the assumption she has not opted for the scheme of 115 BAC. HRA received. How much is HRA received by her? 30,000 into 12. Less exempt under section 10 subsection 13A. Actual received 3,60,000. Can she pay rent to her husband? Yes, says the court. The court has said you can pay rent to your spouse, your father, everybody. Rent paid minus 10% of salary. What is the salary? 1,20,000 plus dearness allowance 30, 160. Okay, 1,30,000 salary is equal to 1,20,000 into 12 plus dearness allowance of 30,000 into 12. 18 lakhs is the salary. Okay. Rent paid minus 10% of salary. So the rent paid, the question says 40,000. 4,80,000 minus 1,80,000, 3 lakhs. Where is she residing? Chennai. 50% of salary, 9 lakhs. Whichever is less goes to the outer column. Taxable HRA is 60,000. Please understand this. This will be useful when we do the taxable HRA 60,000. The third part of the question is compute the total income of Bajrang on the assumption he has not opted for 115 BAC. So let's look at Bajrang. He has turnover where I am going to rent of vacant land, IFOS, house property, arrears of salary, gift received from relatives, brought forward loss, capital gains. Okay, so almost all heads he has. Salaries. arrears of salary received. Somebody asked me, no? Arrears is taxable only in the year of receipt. Arrears is taxable only in the year of receipt. 1,50,000. Standard deduction under section 16 subsection 1 is in the old tax regime. So 50,000, he will get 1 lakh. He will get 1 lakh. House property, rent received 40,000 into 12, 4,80,000. Rent received 40,000 into 12, 4,80,000. Okay. 30% standard deduction, 24A. Okay. 96, 144. So 2 lakh, no, 3,36. Business or profession, section 44AD. Business or profession, section 44AD. Turnover into 8% since it's wholly by cash. So what is the turnover? 1 crore 20 lakhs into 8%. 1 crore 20 lakhs into 8%. 9 lakh 60. 9,60,000. Capital gains as computed. Can you just tell me the amount which we computed? 2 lakhs. 3 lakhs. Other sources. Rent of vacant land 96,000. Gift from relatives not taxable. Gift of motor car not a specified asset not taxable. Okay. Okay, I'll do the loss adjustment here. Loss to be adjusted in PGBP, brought forward loss. I should have adjusted there, but I'm taking it here and adjusting it. 3 lakhs. Gross total income slash total income. I don't think there is any there. 1,436 plus 960 plus 6 minus 3. 14 lakh. Very good question to understand your 44 AD IFOS, house properties. Yeah, sure. Gift also. Got it, friends? Got it, friends? No, no, no. Gift from relatives fully taxable. Other gift up to 50,000 not taxable. Exceeding 50,000 wholly taxable. Gift from relatives fully exempt. ஆமாம் ஆமாம் ஆமாம். Compute the total income of Usha on the assumption she has not opted the scheme of 115. So she can claim HRA, children education. Okay. Now we are going to work out salaries. One question before we wind up for the day. Yeah. You want me to show? Basic salary 1,20,000 into 12, 14,40,000. Dearness allowance, okay, 60,000 into 12, 7,20,000. Lunch allowance fully taxable, my dear friends. Only if it is a perquisite, you have 50 rupees exemption, 1,20,000. Medical allowance fully taxable, my dear friends. Children education allowance received is for 4,000 per month. Less exempt 100 into 2 into 12, 2,400. It comes to 45,600. HRA received is HRA taxable. Directly we have the working note. HRA taxable 60,000. Okay. Contribution to PPF, I'll come to that. 1 lakh, okay. Bank FD interest, savings bank interest. Is there any other information pertaining to her? Gross total, sorry, taxable gross salary. 2160, 2280, 2340, 2385 600, 2445 600 should be. Please check. Standard deduction under section 16 subsection 1, 50,000. Taxable salary 23,95,600. Income from other sources, FD interest 15,000. Savings interest 15,000. FD interest is 50. Sorry. Gross total income 24,600. Any income of minor child given? No, right? Pakka clear? Pakka clear? Okay. Very good question again, where we had lot of understanding. Always small understanding leads to larger marks. Okay. Small understanding, small nuances will help you a lot. Okay. We will continue tomorrow morning again at 6. Namaste. Good morning. Welcome to the last session of revision. Today we will wind up with doing some questions. These questions will be again examination oriented and past asked questions. So without wasting any time, we are going into the questions. We completed up to the 34th question. I'm not saying that we adopted a chronological order, but we are picking up those important questions and working out. Question number 35. Following details are provided for two individuals, Umesh and Suresh, for the previous year. This question will give you a rough idea or an idea about taking up presumptive computation. Age, Umesh, Suresh. And remember, Suresh is a senior citizen if at all we are going to work out in the normal tax regime. Residential status, Suresh is a non-resident. So the senior citizen benefit is not going to be available. That extra 3 lakhs, a basic exemption limit extra, is only for resident senior citizens and resident super senior citizen 5 lakh. He is a non-resident, so he will not get. Gross receipt, through cash receipt, through banking channel. Nature of activity, retail, 44 AD. Flying of 3 heavy vehicles with 15 tonnage, 15,000 kgs, 44 AE. Brought forward losses, LTCL, which cannot be set off. 90,000 business loss can be set off. Compute total income of Umesh and Suresh for the assessment year by applying the relevant presumptive provision, assuming none has opted to pay under. Okay, anyhow, it's only total income computation, not tax computation. But as an additional thing, we will write and give. Let's start. One. Coverage section, 44 AD, 44 AE. Okay, first let me focus on Umesh. Gross receipts 72 lakhs. Receipt, or rather, we'll directly take the answer. Income under section 44 AD. 6% of turnover through approved modes. So what it happens is 25 lakhs into 6%. 25 lakhs into 6%, I'm getting 1,50,000. 25 lakhs into 6%. 8% of turnover through turnover otherwise than by approved modes. So that makes it 47 lakhs into 8%. 47 lakhs into 8%. My dear friends, 47 lakhs into 8%, 3,76,000. 3,76,000. Income under 44 AE. The question says, let's not worry about all these things. Flying 3 heavy goods with 15,000 kg for the whole year. That's what we understand. 1 kg, 1 rupee every month or part thereof. So 15,000 into 1 rupee into 12 months into 3 vehicles. Repeating, 1 rupee 1 kg. 15,000 means 1,80,000 per annum per vehicle. And there are 3 vehicles with the assessee. Okay, so 15,000 into 12 into 3 makes it 5,40,000. 5,40,000. So this is the mode of computing. Now, if I go, brought forward LTCL cannot be adjusted. LTCL can only be adjusted against LTCG, whereas brought forward business loss can be adjusted. And I told you in the last class itself, even loss of a discontinued business can be adjusted. So less brought forward LTCL cannot be set off against business income, can only be set off against LTCG. Brought forward business loss can be set off against business income. Remember, remember friends, suppose the question has given any unabsorbed depreciation brought forward, please do not set off. Please do not set off because unabsorbed depreciation cannot be set off. 90,000. So I am getting a gross total income slash total income of, friends, 1,50,000 plus 3,76,000 makes it 5,26,000, and here 4,50,000. Am I clear? Yeah. Note. Computation is the same in both tax regimes. Okay. For Suresh, a non-resident, the mode of computing tax under normal tax regime will be by taking basic exemption limit of rupees 2,50,000. Okay. Note, the extra basic exemption limit for senior citizens is only in the case of residents. Okay, not available for non-residents, not available for non-residents. Remember. Okay. This is just additional answer. The question has not asked us to compute the taxation. So this is have this as additional answer. Okay. We go to the next question. Ramesh, working in ADC Private Limited, is drawing the salary of basic commission on sales, 2% on sales made by him. Commission amounted to 40,000 per annum. Employers' contribution to RPF, employers' contribution to National Pension Scheme, employers' contribution to Superannuation Fund, which is fully exempt. The company has given him a housing loan of 15 lakhs on 1st June, on which interest of 6% is charged. The entire loan is outstanding, SBI rate being 9.5%. Compute the income chargeable under the head salary for the assessment year on the assumption that Ramesh has not opted for 115 DEC. We work out the answer. Computation of taxable salary. The question says, compute the income chargeable to tax under the head salary. In fact, you need not give gross deductions under ATC and all. They are eligible for employers' contribution to National Pension Scheme, ATCCD subsection 2. I'll write it as a note, but that need not be provided because the question only asks us to compute income chargeable to tax under the head salary. Okay, right. Now we start. Basic salary. Okay, 1,25,000 into 12. 1,25,000 into 12, 15 lakhs. Basic salary. Commission as a fixed percentage of turnover comes to 40,000 per annum. It's not per month, it is per annum. Okay. Employers' contribution to RPF 3 lakhs. 12% is going to be exempt. Let's find employers' actual contribution to RPF is 3 lakhs. Less exempt 12% of salary. So salary will include the commission which is paid as a fixed percentage of turnover. So 15 lakh 40,000 into 12%. Repeating. Okay. So basic salary is 15 lakhs plus 40,000, 15 lakh 40,000 into 12%, 1,84,800. 1,84,000. Employers' contribution to RPF is 1,84,800. If I reduce it, I'll use the system calculator. That seems to be faster personally for me. And you can also see my computation. 1,15,200. Okay. Employees' contribution to employers' contribution to National Pension Scheme or fund, whatever it is. Okay, employers' contribution to NPS 1 lakh. My dear friends, first this will be included in the gross salary. First this will be included in the gross salary. Later as a, okay, employee can claim deduction under section 80 CCD subsection 2 to the extent of 14% of salary. So in this case, it has not exceeded. So let's not worry. They can claim it fully. Okay. Okay. This deduction can be claimed under 115 BAC also. Okay, so this is a deduction where can be claimed under 115 BAC also. So this contribution the employee can claim under 115 BAC. Now comes the next, probably this is a rare adjustment, employer's contribution to superannuation fund. Okay, 2 lakhs. Less exempt. Okay, only 1,50,000 is exempt. Rare. Section 17 subsection 2, which speaks about perquisite, says it is exempt up to 1,50,000. So the balance 50,000 becomes taxable. Okay, perquisite value of concessional interest loans. Perquisite value of concessional interest loans. Okay. SBI rate minus rate of employer into loan outstanding. So in this case, SBI rate is 9.5 minus, okay, which makes it 3.5 into the loan outstanding of 15 lakhs into the loan was taken from 1st June. So 10 by 12, 10 by 12, 3.5%, 3.5% of 15 lakhs for 10 months because loan is from June. Okay, so what happens? Okay, 15 lakhs into 3.5% into 10 by 12. Okay, 43,750. 43,750. Just checking again. $43,750. I think all adjustments are over. So this is also over from the top. Okay, is there the question continues? No. Okay, so this is all adjustments are over. Now I am getting gross salary. Gross salary. Okay, it will be 15 lakhs plus 40,000 plus 115,200 plus 1 lakh plus 50,000 plus 43,750, 18,48,950, 18,48,950. Standard deduction under section 16 subsection 1. Here is where we have to note down assumption that Ramesh has not opted for 115 BAC. This is the only place that will have a huge impact in this question at this level. Taxable salary. Okay, minus 50,000 makes it 17 lakh 98,950, makes it 17 lakh 98,950. Note, I'm writing this for your understanding. PF contribution of employer exempt up to 12% of salary. Superannuation exempt up to 1,50,000. NPS contribution first include in gross salary and then provide deduction under section 80 CCD subsection 2. So, okay. So first you include it and then exclude it. That's why it is available even under concessional tax regime. Okay. This also I'm giving it to you as a small note. The maximum contribution for all funds should not exceed 7,50,000. If it exceeds, then such excess becomes taxable. Okay, so suppose I am making, let's take in this question, the maximum, it has not exceeded 3 plus 1 plus 2. Okay, 6 lakhs only. Suppose this has come to 10 lakhs, the remaining 2,50,000 taxable. Keep it, store it somewhere in your mind. Very rare cases, but this is how it has to be approached. Am I clear to you? Am I clear to you? Right? This is the computation of the taxable salary. So these are all some of the total incomes or various other things we have computed. Okay, keep revising this, wherein we are able to see various chapters and how it is being dealt with. Now I'm going to some standalone chapters with the available time. I'm going to first take up capital gains. Okay, because that is always a standalone chapter question. IHP we at least worked, IFOS we at least worked, but capital gains we have not yet. So I'll first take up capital gains. We'll go into capital gains. I am leading you to page number 14 of this material. Actually, I'll first answer the last question that will be helpful for you. Enumerate the change in capital gains computation and rates of taxation that are implemented in Finance Act 2024. Okay, this is very important to understand. Finance Act 2024 made significant changes in capital gain computation as well as taxation. Both on computation of capital gains and on taxation of capital gains, there is a change. First, let us understand from the computation perspective. First, let us understand from the computation perspective. For a long-term capital asset, benefit of indexation was available till 22nd July 2024. Indexation brings the asset to present value and to compute gains. So, indexation benefit was available till 22nd July 2024. This benefit is removed from 23rd July 2024. Hence, the mode of computation is net consideration minus cost of acquisition and improvement. So this is the first significant change. That is, no more you can claim indexation. No more you can claim indexation while computing capital gain. While computing capital gain, no more indexation can be claimed. Okay, so it will be full value of consideration minus cost of transfer will give me net consideration minus cost of acquisition and improvement. We all know if it is acquired before 1/4/2001, then fair market value or stamp value, whichever is less, should be taken. Okay. Hence, the mode of computation is net consideration minus cost of, even for a, now there is no difference between a long-term capital asset and a short-term capital asset. What underwent in rate of taxation? Okay. STCG on which STT is paid, which is taxable under 111A. The rate was 15% till 22nd July 2024, and that became 20% from 23rd July 2024. The first change is in section 111A. The rate from 15% went to 20%. Okay, it's enough if you listen also. You need not take it down with your available time, but I want you to be very clear about this. LTCG on which STT is paid, which is taxable under 112A, changed as follows. The non-tax limit was increased from 1 lakh to 1,25,000. So first 1,25,000 not taxable. This amendment went up to 1,424, which means for the whole year first 1,25,000 not taxable. Rate of taxation on amount on gains exceeding 1,25,000 was 10% till 22nd July 2024, and that became 12.5% from 23rd July 2024. This is the major two things. The limit extension is from 1st April. Rate of taxation increase. The limit increase is from 1st April. Rate of tax increase is only from 23rd July. So if the gain is before that date, 10%. After that date, 12.5%. LTCG taxable under section 112. All other LTCG, land, building, jewelry, work of art, architecture, painting, shares, unlisted shares, everything. Because for unlisted shares, no STT. LTCG under, okay. The rate of tax was decreased from 20% to 12.5%. Because indexation was removed, the rate of tax was decreased from 20% to 12.5%. Okay. Special provision for individuals who sell immovable property after 23rd July 2024. Okay, this is a special provision available for individuals who are selling their immovable property after 23rd July 2024. Okay, though I have written the heading, I'm again writing the condition. Assessee should be individual or HUF. Asset transferred should be long-term land and building, immovable property. Let's keep it like that. Asset transferred is a LTCA. If above asset transferred is a LTCA. Asset is transferred on or after 23rd July 2024. Okay, am I clear? If the above conditions are fulfilled, tax will be 12.5% without indexation, 20% with indexation, whichever is less. So if the above conditions are fulfilled, one benefit the law gives us, I understand you people would have invested thinking that you will get the indexation benefit. So pay tax 20% by claiming indexation or 12.5% without claiming indexation, whichever is less. This is only for immovable property. If they say, if they sell unlisted shares, if they sell jewelry, if they sell work of art, architecture, painting, this will not be applicable. And it is only for individuals and HOF. If a company sells immovable property, this is not there, 12.5% of the gain. The indexation can never be claimed, can never be claimed. The next point I want you to understand is, while computing this benefit, you should not see. While computing tax only, you should see. While computation of capital gains, directly reduce and put. While computing the tax, just check whichever is less. Please read through once the amendment or listen. With this ideas, we go into this chapter of capital gains. Mr. Devendra, a resident Indian, aged 55 years, held 10,000 shares in Pulse Limited, a listed company, which was purchased on 1st Feb 2021 for 1,500 per share. On 1st May 2024, the company announced the rights of 1:1 for 1,200. On this trade, the market price was 1,900. Devendra sold 5,000 of his entitlement for rupees 500 per right entitlement. Mr. Devendra himself exercised his right for the remaining shares on 31st March 24. On the date of exercising the option, the share price was 2,000. On 12th December 24, Devendra sold all the 15, that is 10,000 plus this 5,000, 15,000 for 2,500. He invested 4 crores in acquisition of a residential house on 24th January. Sale of shares, purchase of residential house 54F. By utilizing the sale proceeds from the sale of shares as well as the right entitlement. Mr. Devendra does not own any other residential property. You are required to compute the income under capital gains for the assessment year. Assume he has opted for capital gains. The scheme, concessional or normal scheme, does not matter. For capital gains, please understand, nowhere in capital gains salary there are so many claimable and not claimable. House property self-occupied cannot be claimed. PGBP, additional depreciation, scientific reserve contribution, etc. Even in IFOS, that minor child clubbing, family pension, there is a change. But in CG, no change. Whether you need not even read which regime he is in. Compute the income under the head capital gains. Assessee has made 3 transfers. Assessee has made 3 transfers. Shares acquired in Feb 2021 and sold in, my dear friends, on December 24th. LTCA. Okay. Rights renunciation. Okay. Rights renunciation. Sorry. Rights renunciation. STCG always. Okay. Rights shares. Mr. Devendran sold. Okay. On 1st May 24, he got it. Okay. Rights share entitlement 1st May 24 and sold in December 2024. Again, this is a short-term capital asset. Please remember, in a examination tension, don't add up all these things. Try to understand which is short-term, long-term, because 54F can also be claimed only for the short-term, and the mode of taxation differs. Okay. Computation of capital gains of Mr. Devendra for financial year 24-25. Okay, for financial year 24-25, listed shares. Okay, so anyhow, full value of computation. Okay, first I'm doing for LTCA. Full value of computation. Okay, 10,000 shares into what is the sale price? 52,500 per share. 10,000 shares into okay, 10,000 shares into 2,500 per shares, 2 crore 50 lakhs. Less cost of acquisition. Less cost of acquisition. These shares were purchased 10,000 shares for 1,500 rupees. 10,000 shares into 1,500. I understand it should be 1 crore 50 lakhs. I understand it should be 1 crore 50 lakhs. Gross LTCG 1 crore. Gross LTCG 1 crore. Exemption under section 54F. amount invested is more than net consideration. Hence, whole of capital gain is exempt. Repeating, my dear friends, he has invested 4 crores. The capital gains only comes to 1000 per share. That is the long term one. That is the long term one. So the entire capital gains get exempt. Taxable LTCG in this case is nil. Taxable LTCG is nil. Full consideration received is STCG, is taxable. So here I am receiving I'm eligible for 5,000, 10,000 rights, 1:1. So I'm selling 5,000 for 500 rupees. 5,000 for 500 rupees, 25 lakhs. Full value of consideration for rights shares, the remaining 5,000 into 2,500. 1 crore 25 lakhs less cost of acquisition. What is the price I paid for the rights? Was 2,000. Okay, no. Mr. Devendra sold 5,000 rights. Okay, is 1,200 per share. 1,200 per share. I'll explain you something. I'm taking 2,000. I'll explain you why. 5,000 into 2,000. It's a very tricky question. Gross short-term capital gain 25 lakhs. 25 lakhs. So total of 50 lakhs. Okay. Now I'm going to explain you why, okay, where shares are purchased at a price lesser than fair market value, gift provisions, that is inadequate consideration provisions, will be applicable. Okay, if shares are purchased at a price lesser than fair market value, remember inadequate consideration provisions will apply. Okay, okay, okay. Fair market value of 5,000 shares on the date of exercising the option. 5,000 into 2,000. Okay, 5,000 into 2,000, that comes to 1 crore. Actual price paid, 5,000 into 1,200. 5,000 into 1,200, 60 lakhs. Taxable under gift provisions, okay, 40 lakhs. Taxable under gift provisions, 40 lakhs. Since it becomes taxable, the cost of acquisition will be 2,000 and not 1,200, because this difference of 800 rupees you are taxing under IFOS. So when you are taxing under IFOS, the cost of acquisition will be fair market value on the date of exercising the option. Please write it down neatly. Clear? Moving on. Mrs. Parul sold her commercial property on 1st Jan 2025 for 86 lakh, value determined by the stamp authority 1 crore. So 1st Jan 2025 after 23rd July. Such plot is acquired on 1st April 2006 for 1,05,000. Brokerage at the time of purchase and transfer of land are 15 and 86 respectively. On 1st March 25, she invested in Power Finance Corporation 60 lakhs. You are required to compute her capital gains in the hands. Let's not worry about which regime she is. That is immaterial. Full value of consideration. Okay, she has sold it for, okay, right. Full value of consideration by adopting section 50C of the law. Actual consideration, she has sold it for 86 lakhs. 110% of actual consideration, okay, 86 lakhs into 110%, 94 lakh 60,000. Stamp value is 1 crore. Since actual consideration exceeds 110% of, since stamp value exceeds 110% of actual consideration, stamp value will be taken as full value of consideration. If it has not exceeded, I would not have taken. Less cost of transfer 86,000. Net consideration 99 lakh 14,000. 99 lakh 14,000 less cost of acquisition value determined by such plot is a 1,05,000 plus 15,000. 1,05,000 plus expenses on purchase 15,000. Gross long-term capital gain. Gross long-term capital gain 99 lakh 14,000 minus 1 lakh 20,000, 97 lakh 94,000. Exemption under section 54 EC. Gross LTCG 97 lakh 94,000. Okay. Amount invested within 6 months. Amount invested within 6 months because 6 months 60 lakhs. Maximum limit whichever is less, so 50 lakhs goes to the outer column. Taxable LTCG 47 lakh 94,000. Okay. 47 lakh 94,000. I'm just writing so that you are clear. Note, at the time of computing tax, assessee being an individual and asset sold being immovable property has the benefit of paying tax at the rate of 12.5% on the gains computed above, or 20% after providing indexation benefit, whichever is less. Even in exam, you can write it or leave it. Not necessarily you should write it. Kavita, an individual, sold agricultural land 40 lakhs, now only, so after 23rd. The land is located 3.6 kilometers from the local limits of municipality, whose population was 6 lakhs to the last preceding census. It was acquired by her in 2014 for 18 lakhs. She also sold a vacant land located in an urban area, and the value of land for that purpose, stamp value, is 80 lakhs. The vacant land was obtained as gift, which was originally purchased by her father for 12 lakhs. The fair market value on the date of gift, don't worry. Kavita deposited 30 lakhs in 54 EC bonds. Read through. Before going into the solution, I want you to understand something. What is a rural land? Okay, if the population is less than 1 lakh, first 2 kilometers will be considered as urban. Beyond that, it will be taken as rural. In this question, okay, in this question, so first 2 kilometers. But in this question, it is population of 6 lakhs. So it comes in the second category. Up to 6 kilometers, it will be treated as an urban area only. It will be treated as urban area only. Even if you don't write this, it's not an issue, but I'm telling you. Land located, I'll write it in summary, where the population of the area is more than 1 lakh but less than 10 lakhs. The first 6 kilometers will be treated as urban area. Okay. In this case, the land is located within 3.6 kilometers. Hence, it is an urban area. The land sale is taxable, because if it is a rural land, it is not taxable. Okay, she has sold. Okay, one, this land is located, okay, in the municipality. The last way it was acquired by her on 36 to the. She also sold vacant land. Okay, urban land and vacant land. Full value of consideration full value of consideration. It was acquired by her. Okay, 40 lakhs. Here it is. She also sold a vacant land for 75 lakhs when the stamp duty is 80 lakhs. So full value of consideration, I'll do like this. Actual sale value 40 lakhs. 40 lakhs for this urban agricultural land. Okay, for this 75 lakhs. 110% of actual sale value. So plus 7,50,000 will make it 82,50,000. Stamp value is 80 lakhs. Stamp value exceeds 110% of actual sale value. Hence, stamp value becomes full value of consideration. So it will be 80 lakhs. Hence, sorry, does not exceed. I'm sorry, does not exceed under a hence actual sale value is full value of consideration 75 lakhs less cost of acquisition. Okay, cost of acquisition, please understand the who's it was acquired by her for 18 lakhs. Okay, the other land, the Vika was obtained by a gift. The fair market value on the date of gift, it was originally purchased for 12 lakhs October 2001. So after 1/4/2001, gross LTCG. Here it will be 22 lakhs. Here it will be 63 lakhs. So together it will be 85 lakhs. Exemption under section 54 EC. Amount gross LTCG 85 lakhs. Amount invested. Okay, the fair market value she has deposited on 25/3/2015. The sale seems to happen, so she has immediately deposited 30 lakhs. Maximum limit 50 lakhs. So 30 lakhs is exempt. Okay, taxable LTCG 55 lakhs. Taxable LTCG 55 lakhs, and whatever note I wrote for the previous question is holding good for this also, for both the properties. Going to the next question, friends. Mr. Manoj is a resident individual retired from employment. He sold his residential building on 3rd July 25. Indexation should be claimed. 2% commission on sales to Mr. Preetham for fetching the buyer. The building was inherited by him as per will from his mother. She had acquired the building before 1/4/2001. FMV as on 1/4/2001. Stamp value of the building on the date of sale. Earlier, Mr. Manoj has entered into a contract with Mr. Ram in August 22 for sale of the same building and forfeited advance of 2 lakhs. He purchased a residential apartment in Madurai and subscribed for REC bonds in November 2025. July, the 4th month, plus 6. It should be purchased before October. Compute the income under capital gain for the assessment year. Mr. Manoj, that doesn't matter. Mr. Manoj has sold the asset before 23rd July 2024. Sorry, it should be 24. Sorry, it should be 24. I made a typing mistake. It should be 24. I'll change it here. It should be 24. It should be 24. At that time, no option. I don't think there is any stamp value on the date of sale given. He sold a residential building for 60 lakhs. Okay. The fair market value, because it was purchased, okay, before 1/4/2001, okay, 5 lakhs into 363 by 100. 363 by 100. My dear friends, somewhere I gave the indexation table. Okay. So if even in exam they will give you, okay, it is 363 by 100. Okay. Gross LTCG. 30 lakhs he purchased. Taxable LTCG 10,65,000. Okay, okay. I'm writing some notes which will be needed. Okay, note 1. Advance money received and forfeited after 1st April 2014 will be taxable in IFOS in the year of forfeiture. In the given case, the advance money forfeited, okay, from Ram they received in August 22, okay, rupees 2 lakhs in August 22 would have been taxed under IFOS in the financial year 22-23. In the financial year 22-23, this would have been taxed. So you need not have any other adjustment. Okay. Manish purchased the 1,000 listed equity shares of 10 each at 100 per share from a broker in 2016. Listed shares. He paid brokerage 3,000. It was purchased before 31/1/18. On 15th March, he was given bonus shares by the company on the basis of 1 share for 2 shares held. He was also given a right to to acquire 1,000 right shares at 90. He acquired 50%, offered and sold the balance 50% for 67,500. The right shares were allotted to him on 30th April. All the shares held by him were sold on 24th September 2024. Compute the taxable income assuming FMB as on 31st Jan 2018 is 150 per share. Ignore 115 BAC. Right. So shares is the repeated questioning. We are hitting it without any difficulty. Read it. listed shares acquired in May 2016, that is before 31st Jan 2018. The cost of acquisition will be taken as actual purchase price or FMV on 31st Jan 2018, whichever is higher. It's like purchasing before 1/4/2001. Here for listed shares, the date is 31/1/18. This is part A. Next, listed shares purchased in May 2016 and sold in September 2024 will result in long-term capital gain. Rights renunciation will result in STCG. Listed shares allotted in April 2024 and sold in September 2024 will result in LTCG. And when I write LTCG, it also includes L also, gain or loss. First, I'm working out for long-term capital asset. Full value of consideration. Okay. All these shares were sold on 24th September at 280,000 into 280. Okay. 1000 into 280. Less cost of acquisition 1000 into, I had purchased these shares for 100, whereas the fair market value as on 31/1/18 is 150. 100 means, okay, 150 only higher. That brokerage will also be excluded. 150. So in this, you all know that 125 not taxable, remaining 5,000 to 12.5%. Here it is. The amount itself is given 67,500. Here it is. What is the, this is bonus shares. Oh, no. Oh, he was also given. Okay. Okay, he was given bonus shares by the company for 1 share every 2 shares. So bonus is also there. So let's make it one more column. How much is the bonus shares given? 1 share for every 2 shares. So 500 bonus shares. So he will get into 280. Then rights shares. I will read the rights shares. On the same day, he was right of 1,000 shares at 90. He acquired 50% and balance 50%. So 500 rights. 500 into 280. 500 into 90. Here dash, here dash. Okay, okay. I'm leading you to miscellaneous areas. Capital gains will be a simple question, either immovable property or listed shares. That's the repeated pattern. Mostly other sources also I'm touching upon. Mostly other sources also I'm touching upon. Mr. Sharath, a resident individual, provides the following details of his income. Interest earned from central government securities, token money received for sale of house property, it was forfeited as negotiation cancelled, dividend, lump sum amount withdrawn from URPF, employer's contribution, taxable. Employees contribution, not taxable. Interest on employers contribution, employees contribution taxable. Lottery income, purchased from Mr. Sonu, his friend, jewelry for 50,000, fair market value 80,000, and diamond for 20,000, fair market value 36,000. He has taken a loan for investment in the shares for which dividend is earned. On this loan, an interest of 2,500 was paid. Compute the income of Mr. Sharath from IFOS, assuming that he has exercised the option of shifting out of default tax region. Reason for each item should be provided. Excellent question. We'll understand a lot. Withdrawal from unrecognized provident fund. Withdrawal from unrecognized provident fund. Employer's contribution and interest on employer's contribution are taxable under the head salary. Interest on employees' contribution is taxable under IFOS. Employees' contribution is not taxable. In the given question, they have asked us to compute IFOS. Hence, employer contribution and interest on employer contribution is not included in computation. Remember this. Employer's contribution and interest on employer's contribution is taxable under salary. Question asks us to only compute IFOS. If the question asks us to compute total income, I would have taken that. Here they have not asked us. I'm starting the solution. Okay. Interest on securities, 50,000. Okay. Advance money received and forfeited, 1 lakh. Dividend from cooperatives. I received a dividend of 15,000 less interest on loan taken for investment. Actual interest is, my dear friends, 2,500. 20% of dividend is 3,000. Whichever is less is allowed. So I can claim 2,500. So the remaining 12,500 becomes taxable. Dividend for which interest you will be able to claim only up to 20%. Interest on employees' contribution to URPF. interest on employees contribution, okay, 20,000. Gross winnings from lottery, gross winnings from lottery, 35,000 divided by 70 into 100. 30% is TDS, so 70 by 100, 50,000. Inadequate consideration on movable assets. FMV of jewelry, it is 85,000. Actual price paid, 50,000. Inadequate consideration, this is A, 35,000. FMV of diamond, that's also jewelry, obviously, 36,000. Actual price paid, 20,000. Inadequate consideration B, 16,000. Total inadequate consideration A plus okay, 35 plus 16, 51,000. Exceeds aggregate, exceeds 50,000. Whole of inadequate consideration is taxable. So I will tax the entire 51,000. I will tax the entire. For monetary consideration and immovable properties, look for aggregate. For immovable, individually, we should see. So total income from other sources, total income from other sources is 150, 162, 500, 182, 500, 232, 500, 283, 500. If at all any total difference, please look into it. I don't want to waste time on that. Mr. Ajit ex CMA shares the following information of income. Amount received for evaluation of answer papers. Income tax refund, interest amounting to. Cash gift received from his friend on his wedding anniversary. Gift received from his son. Okay. Amount received from letting out residential house property, 50,000, normally IHP. Dividend from Indian companies, interest on loan. Compute the income chargeable under IFOS in the hands of Mr. Ajit by briefly giving reasons wherever applicable, assuming he has opted for default tax regime. No issues. It's taxable under house income from house property. Amount received on letting out of house property is that. Okay. Only subletting is taxable under IFOS. Since the question is asking us to compute IFOS, we are not including the rental income of house property. Evaluation of answer papers, 70,000. Less direct expenditure. Normally it will not be allowed, but here it's given as direct expenses. Otherwise, don't allow it. If they give it generally, don't allow it. Okay, 68,800. Okay, interest on income tax refund. Remember, income tax refund is not taxable. The principal portion not taxable. Only the interest portion is taxable. Okay, 7,000. Cash gift on wedding anniversary. The aggregate exceeds 50,000. Hence, wholly taxable 76,000. Gift from son is not taxable, relative. Okay. Dividend income is, my dear friends, dividend income is 65,000. Dividend income is 65. 1, 2, 3, 4. Oh, yeah. Amount, that's what this letting out. Okay. So this is also over. Dividend income is 65,000 less. This is the only deduction allowed. If the question gives you collection charges, don't give it as deduction. Only interest on, okay, loan taken for investment. Actual interest is 15,000. 20% of dividend. Okay, so 13,000, whichever is less. So 13,000. So 52,000 becomes taxable. 52,000 becomes taxable. We proceed. Sonali submits you the following information. Interest on post office savings bank, winnings from lottery we need to gross up, received a motor car as gift, not at all taxable because movable property does not include motor car, consumer durables. What it will include is jewelry, work of art, architecture, painting, shared securities. Other than that, don't include anything. Cash gift of from 4 friends, so exceeds income from undisclosed sources, rent received for subletting of the house. You are required to compute the income of Sonali chargeable under IFOS. Sonali does not opt to be taxed under 115 BAC. Okay. Now I'm going to give you a small aspect. Please exempt up to 3,000 if it is single and 7,000 if it is joint. Please exempt up to 3,500 if it is single and 7,000 if it is joint. $28,840 divided by 70 into 100. Friends, it is not a specified movable asset. Hence, receipt of this is not taxable. Undisclosed. So IFOS taxes all residuary item. If we know it is salary, I'll tax it there. If I know it is business, I'll tax it there. If I know capital gains, if nothing is known, simple, all examination questions, so you can understand. Okay, I will also go ahead and complete IHP also. Some questions are there in IHP as standalone chapter, though I know we have completed extensively IHP also in comprehensive. Let me also do the solution for a smaller issue, smaller questions. Sonu, a resident individual, 34 years, give the particulars for following relating to two house properties. Property A let out MV, FRV, SR, AR, unrealized rent, interest on loan taken for purchase of house property. Property B self-occupied. Remember, if I am falling under the concessional tax regime, nil. And no interest is allowed. If I am following the traditional tax regime, interest can be claimed, NAV nil. So I don't want these three things. Interest on loan for 250. Calculate the IHP chargeable to Sonu, assuming he has opted the, he has opted the new default tax regime. Okay, indicate reasons clearly. Municipal value, 6 lakhs. Fair rental value, 3,50,000. Standard rent, 8 lakhs. Net actual rent, 55,000 into 12 minus unrealized rent of 55,000 into 2. Repeating, actual rent 55,000, 2 months. So 55,000 into 10, 5,50,000. Okay. The rule says gross annual value okay will be so 6 lakhs 350, whichever is higher, 6 lakhs, 6 lakh 8 lakhs, whichever is less, 6 lakhs, 6 lakhs. So this will be 6 lakhs MV, which is higher than FRV but lesser than SR and higher than AR. Less municipal taxes only if it is paid. Only if it is paid. Have they given? No, nothing is given. Don't assume anything. Okay. Net annual value, deduction under section 24. Standard deduction 30% of NAV, I'll get 1,80,000. Interest on borrowed capital, full amount I can claim, fully I can claim 2,50,000. So this comes to 4,30,000. Taxable IHP 1,70,000. Please check it out. Taxable IHP 170. As I told you, self-occupied, I'll put a thing for you. So this is Mr. Ramesh, aged 55 years, is a owner of a house property, MV, FRV, SR. The above property was let out for 70,000 for April to Jan. Thereafter, the tenant vacated and Ramesh used the house for his self-occupation. Rent for the month of Jan could not be realized from the tenant. Ramesh has not instituted any legal proceedings for recovery. Mr. Ramesh paid municipal taxes 10% during the year and paid interest of 35,000 during the year for the amount borrowed for the repairs of the house. Calculate the IHP chargeable, assuming he has exercised the option of shifting out of default tax regime. Directly we can compute it. Friends, the law says where a property is self-occupied for part of the year and let out for other part, it is deemed to be let out for whole of the year. MV, FRV, SR will be taken for whole year, but actual rent will be for actual let out period. Municipal value 9 lakhs. FRV 7,50,000. SR 8,50,000. Actual rent, net actual rent, how much is 75,000, 70,000 into 9 months. Okay, April to December, Jan is unrealized. So 70,000 into 6,30,000. gross annual value. Okay, 9 lakhs, 750, whichever is higher, 9 lakhs. That compared with 850, whichever is less, 850, that compared. Okay, SR, which is higher, lesser than MV, but higher than AR. Less municipal taxes paid. Municipal taxes paid. Okay. Mr. Ramesh paid municipal taxes 10% during the year. The municipal value is 9 lakhs 90,000. At 30%. Even if it is repairs only for self-occupied, it is restricted to 30,000. Deemed to be let out for whole of the year, 35,000. Some alternative thinking will be there. Municipal taxes, you should allow only for 10 months. Interest also for 10 months. Anyhow, 2 months you can claim for self-occupation. Assessee is not in default tax regime. Since it is deemed to be let out, I have claimed 90,000. There is an alternative thinking also that you should allow only for 10 months. I'm okay with that also, but please write your work done like that. Note, there is an alternative school of thought that only 10 months empty and interest to be allowed. In which case, the let out property answer will be, okay, 8,50,000 minus, okay, 90,000 into 10 by 12, 75,000. NAV will become 7,75,000. Standard deduction will be into 30%, 2,32,500, and interest will be 35,000 divided by 12 into 10, 29,166. However, the balance interest can be claimed for self-occupation. This is a very good question to understand the house property and wind up the chapter. Mr. Aradhya provided the following information in respect of his various house properties. Particulars, all the three are self-occupied. No, you have to understand only two properties can be self-occupied. We need to find out which two. Mr. Aradhya provides three houses situated in Delhi. MV, FRV, SR. Empty. I hopefully take it as P. Repairs we should ignore. Interest on loan, here it will be only 30,000 allowed if it is self-occupied. 2 lakhs is the maximum you can claim. Compute the income in the hands of Mr. Aradhya. He does not opt to be taxed under 150, obviously. Okay. So 2 houses, we should decide which houses he should self-occupy, which houses he should let it out. Deemed to be let out. It is at the option of the assessee to claim which needs to be, which deems to be let out, which deems to be let out in the, okay, we need to work out various options, and whichever gives a lesser taxable income, that option should be preferred. Okay, now option 1. House 1 and house 2 are self-occupied. House 3 is let out. Computation of income from house property. Okay, computation of income from house property. Okay, particulars H1 and H2. Okay, now H3. MV, FRV, whichever is higher, 750. That which SR, whichever is lower, 6,50,000. Gross annual value, 6,50,000. Less MT paid. Okay, 15% of 7,50,000 assumed to be paid. 15% of 7,50,000. Okay, 1,12,500. 1,12,500. Net annual value nil. At 30% into 30%, 161 to 50. Interest on borrowed capital. Here it is restricted to 30,000 because both the borrowals are in before 99, and here it is restricted, it is fully allowed. It is fully allowed, 2,50,000. Okay, friends, 96 to 50 under option 1. Under option 1, in option, whenever you deem to be let out, full interest can be claimed. If it is self-occupied, before 99, 30,000, after. Before 99 will never be asked. I don't know why they asked, because 25 years is over. That housing loan would have been over by now. Okay. Only repairs 30,000, remember. I don't know why they have asked. I'll go for option 2. House 1 and house 3 are self-occupied. House 2 is deemed let out. Okay. Okay. Now, house 2, the gross annual value 350, 3 lakhs, whichever is higher, 350, that 3 lakhs. 15% of 3,50,000. Friends, interest on borrowed capital up to 2 lakhs you can claim. Why? Because for this house itself 250 is there, another 30, 260, but maximum 250. Here entire 1,50,000 can be claimed. I pasted this. Option 3. H2 and H3 are self-occupied. H1 is deemed let out. Two 2 lakhs, whichever is higher, 250. That with 3 lakhs, whichever is lower, 2,50,000. 15% of 2,50,000. Two lakh 12,500. Here again, I can claim 2 lakhs. Conclusion. Option 2, that is H1 and H3 are self-occupied, H2 deemed to be let out. Should be preferred as there is more loss to be carried forward and adjust. Am I clear to you, friends? Am I clear to you? Okay. I want up here these sessions. My dear friends, please look into all this. Regarding TDS or smaller things, don't worry about it. That's all. Whatever the classroom notes I have given, that is more than sufficient. 1 or 2 marks for CMA students. So please look through these things. You will be getting lot of ideas before the date of examination. That is after completing the previous examination. Come back and work out few questions. Look the answers for few questions. You will be through. Thank you very much, my dear friends. It was a good revision session. I enjoyed. I hope you also enjoyed in the same way I enjoyed. All the very best. Meet you all in the final classroom to discuss more of the best subjects of our journey, that is direct taxation. Thank you very much. All the very best from personally me, Srivatsan, and from Bharatwaj Institute. Thank you.